Good morning, everyone. I'm Brian Sazi. Alexis Christoforous is off today. This is the first trade for this Black Friday, November 29th. Shoppers rejoice as the deals are out there to be had. We were in the stores early and we'll break down what we exactly saw. We chat with the president of Nordstrom. He tells us what the retailer is focused on this holiday season and where growth will come from in 2020. And sneakerheads, you won't be left out this Black Friday. We'll break down where you might be able to sprint to find some good sneaker deals. Let's get a look at the futures here ahead of the opening bell. Some pressure on this Black Friday. We are seeing some pressure following President Trump signing 2 bills on Wednesday in support of those Hong Kong protests. That has some on the street fearful on the status of the Phase 1 trade deal. But we'll get a full check of the market shortly. But first, today's big story. Black Friday is here, and it's still one of the biggest shopping days of the year. Early data shows Thanksgiving Day sales breaking records. According to Adobe Analytics, online retail sales on Thursday expected to hit $4.4 billion. That would be up a nice 18.9% year over year. Nearly half of those sales came from smartphones. Joining us now is Heidi Chung to help break down the numbers. Heidi, I heard you did a little shopping on Thanksgiving Day.
I did, but I know that you did as well. So yes, happy Black Friday first and foremost. It's one of our favorite days of the year. I have my handy dandy sheet here with some of the stats for this holiday shopping season. The National Retail Federation estimates that almost 115 million people are going to be shopping today. That's a crazy number, right? Okay, so shoppers are expected to spend a total of $7.5 billion on Black Friday and $9.4 billion on Cyber Monday. That's, of course, according to Adobe Analytics. Salesforce is predicting that Black Friday is on track to be the biggest global digital shopping day of the holiday season for the third consecutive year. Brian Sazi, Salesforce projects online sales to reach $40 billion globally and $7.4 billion here in the U.S. Now, I was browsing the sites, the usual Target, the usual Walmart, and I have to say, these companies have really stepped up their game when it comes to ease of finding things on the sites, right? You can see where the deals are, what you're getting the best discounts on, and the overall shopping experience online has done really well. I haven't gone into the stores, though, and I know that you have. I want the details.
It was interesting Thanksgiving for me. Started at 6 a.m. at Kmart, and there were some people there, but by and large, Black Friday is still a thing. It's just a thing online. You're looking at some of the Adobe Analytics numbers for Thanksgiving Day, up close to 20% online. And what really caught my attention, a lot of these sales are being done now on mobile devices. And to your point, Heidi, a lot of these retailers have just made it easier to shop on mobile devices despite the small screens.
I actually jumped on some of the sales earlier. I ordered stuff on Monday and I got it on Wednesday. I didn't even opt for 2-day shipping. They sent everything. I got like 10 boxes in the mail on Wednesday. I know it's a little embarrassing to admit on air here. But some of the brands that are being the most loved this holiday shopping season, Nintendo, number 2 is Apple, Samsung, Google, and Nike. So no surprises really to me, but Nintendo as number 1, that tells me that the Switch and everything that they're doing is really stepping it up. And it's something that people are really looking forward to this holiday.
And a lot of Apple stuff is sold out. I went to Best Buy, I went to Walmart, I went to Target, and we'll be talking about it later in the show, but a lot of AirPods. This stuff is completely
You live in
stock.
your AirPods. I also commute with my AirPods in all the time. But with the new AirPod Pros, I figure now that a lot of retailers are slashing the prices on their original AirPods, that's going to be a huge gift for a lot of people in the Christmas shopping.
You know what also caught my eye? The crowds died down pretty significantly. Once the store openings happened, once JCPenney opened its doors at 2 p.m., the malls in the evening felt like a ghost town. And for a lot of retailers, I'm not too sure if they're happy about that.
But if you think about it, do you think that's because a lot of people are shifting to online instead of having to go and deal with stampedes and people fighting for the TV that you can get essentially online delivered to you as well?
Yeah, no, they have a lot of these retailers, Target, Walmart, same-day delivery, but where they would be probably worried about, online sales are less profitable. So they need human beings to show up in these stores.
Yeah, well, it's less profitable for a lot of companies, but Target has figured it out, right?
Get on those stores, Heidi. Get out of here.
I'm going to go right now.
All right, we'll talk to you soon. Let's head down to the New York Stock Exchange now and check it with Yahoo Finance's Inez Ferre. Inez?
Brian, tech data this morning is surging in pre-market. This is after Apollo Global Management upped its offer to $145 a share. That's a deal valued at around $6 billion. You'll recall that the original deal was for $130 a share, but CNBC is reporting that Warren Buffett's Berkshire Hathaway had offered $140 a share. That's when Apollo swooped in and came in with a $145 a share offer, and the agreement was announced late on Wednesday night. market. We're watching this morning Deere & Company. This is after a price target cut at UBS to 169 from 180. You'll recall that earlier this week, Deere warned about the lingering China-U.S. trade tensions and how that's really affecting farmers. They're more cautious with buying big equipment. And also Dollar Tree, its price target was cut at UBS to 108 from 120. Dollar Tree earlier this week highlighted the impact of tariffs and included the impact of tariffs in its current guidance. Brian, it's a moving morning here because there's lots of kids here. It's Kids Day on this Black Friday. A lot of fun.
That's pretty cool. Inez, did I hear that right? Warren Buffett got beat out for a deal. How does that happen?
I know, he got beat out on this deal, offered 140 and said that was, reportedly he said that was his offer. So he had Berkshire Hathaway has a lot of cash on its hands.
Yeah, value investor to the very end. That is Warren Buffett. Inez Ferre, thanks so much.
Thank you.
Coming up here on The First Trade, job cuts at Mercedes-Benz, why the iconic automaker is slashing thousands of jobs. Tensions between the U.S. and China are seeing a new layer emerge. This comes after President Trump signed legislation on Wednesday in support of the pro-democracy Hong Kong protesters and imposed sanctions against Chinese and Hong Kong officials responsible for human rights violations. China denounced the laws, but government officials are still adamant that trade negotiations remain on track. Yahoo Finance's Rick Newman is here with more. Rick, are these discussions, can they still be on track after what the president did on Wednesday?
Apparently, that's what the sort of language, body language out of China seems to be. They condemned this. You should not get involved in our personal affairs here in China. This is a national interest for us, not for you. But they're also saying we're still negotiating with the United States about trade. So it seems that China is willing to say Hong Kong, separate issue over here. We need to stay focused on trade. And China, you know, the trade war is hurting China, so they want to get at some kind of deal. We've been talking about this so-called deal for 6 weeks now, this so-called phase one deal. It is not in phase one yet. There is no deal. So there's a separate problem, it seems, getting some kind of agreement on that. But for now, they continue to negotiate, apparently.
Rick, how big is the market risk? Because investors have been bid up thinking that phase one is a done deal, done and dusted, and they're on to phase two. But December 15th is right around the corner, and those higher tariffs could kick in.
Yeah, and I've been saying all along that I think markets are too optimistic about any kind of deal. We could get something called a phase one deal that probably won't change much. And we know what the sticking points are. The Chinese want Trump to begin to remove all the tariffs he's put in place since last year. And the United States wants reforms in the Chinese economy that the Chinese are not going to do. So to my thinking, if there is any kind of phase one deal, it's probably going to leave the existing tariffs in place. I think the one important development over the course of this year has been that the tariffs on Chinese imports have not turned out to be as damaging as a lot of people thought, let's say, a year ago, when this all was kind of just kicking off. So we've really seen no inflation in end products that you can link to the tariffs. That does mean that the producers here who are paying the tariffs, that money goes from American importers into the Treasury, they're eating it, basically. So they're having to figure out how to take it out of costs and profit, but it's not really getting passed on to the end consumer.
They need to get this thing done. We'll leave it there.
That'd be nice.
Yeah, Rick Newman, good to see you. Let's get a look now at European markets. European markets seeing some mixed action over there. The FTSE 100 down about 0.3%. The CAC 40 and DAX slightly in the green. Yahoo Finance's Tom Belger joins us now from London. Tom, new figures show inflation has jumped more than expected in the Eurozone. Does that put any pressure on new ECB chief Christine Lagarde?
Well, the consensus seems to be that this buys time for the new ECB chief, Lagarde, giving her more time really to focus on the review she's carrying out of the bank's future after taking over from her predecessor, Mario Draghi, but also maybe not to read too much into these figures. The ECB has been trying to boost inflation for years towards its 2% target, but the headline figure's actually been falling for months as Eurozone economies have struggled. So this rise will certainly be welcomed by policymakers, but crucially, it rose by a percentage point more than expected, up from 0.7% to 1%. We've also seen wage growth in the third quarter. Crucially, though, analysts don't think this is the start of a sustained increase in inflation, or likely to get much beyond the 1.5% mark, where you might see the ECB tempted to think about dialing down their stimulus. And analysts just say, given the uncertain environment right now, they simply don't think businesses are going to pass on these costs.
And Tom, switching gears, looks like some big layoff announcements or big layoffs are coming to Daimler. What are they trying to get out in front of the Tesla Cybertruck launch?
Well, the statement put out by Daimler today says the car industry is going through the biggest transformation in its history. They've confirmed plans to axe thousands of jobs, but you've got to feel for a lot of the staff because they haven't said where or the exact number of people affected. But the transformation they're talking about is the shift to electric cars and the real radically higher investment needed to transform their whole operations towards that new technology. And they're also struggling, like other car makers, with the broader crisis hitting the car industry: slowdown in demand, trade war, clamp down on high-polluting vehicles.
Yeah, real tough space is the auto space right now. Tom Belger, thank you. Now for more of what's happening in Asia, here's Deb Price from the South China Morning Post.
Trading sentiment in Hong Kong and mainland markets turned negative today. Traders are worried that China's anger about U.S. legislation signed by President Donald Trump in support of Hong Kong protesters could threaten the partial trade deal being worked on. China data continues to set off alarms. This week, we saw China's October industrial profits post their biggest fall since 2011. Today, the Shanghai Composite Index fell to a 3-month low. Meanwhile, the Hang Seng Index fell 2%. Even Alibaba, which generated huge excitement in Hong Kong when its secondary listing started trading Tuesday, slid today. The trade war, Hong Kong protests, and China economic data will drive markets next week. This weekend, more marches are planned. The city has been relatively calm since last Sunday's election sweep by pro-democracy candidates. Also this weekend, China will release its latest PMI data on the health of its manufacturing sector. That's all from me. Back to you in New York.
Coming up here on The First Trade, an old friend is back. ET teams up with Xfinity in a new TV ad. More on that next. Let's take a look at today's news bites. President Trump made a surprise visit to U.S. soldiers in Afghanistan. He talked to troops and served them Thanksgiving dinner. The commander-in-chief spent 2.5 hours on the ground and told a crowd that progress is being made in peace talks with the Taliban.
The Taliban wants to make a deal. We'll see if they want to make a deal. It's got to be a real deal, but we'll see. But they want to make a deal. And they only want to make a deal because you're doing a great job. That's the only reason they want to make a deal. So I want to thank you, and I want to thank the Afghan soldiers.
The president didn't reveal how or when talks would take place again. Connecting with family members or stalking their feeds on Facebook over Thanksgiving hit a snag. Users of Facebook Messenger and Instagram experienced outages for hours. The company started receiving complaints from East Coast customers mid-morning yesterday. Facebook has resolved the issue and blamed its central software systems for the problem. And Frozen 2 is expected to dominate the box office during this holiday weekend. Estimates from Thursday have the Disney sequel making $155 million over the 5-day Thanksgiving weekend in North America. The film is expected to smash the record set by the 2013 sequel, The Hunger Games: Catching Fire. And E.T. made a surprise appearance during the Macy's Thanksgiving Day Parade, but not as a windblown balloon. Comcast telecom arm Xfinity launched a new commercial starring the extraterrestrial. He arrives in the backyard of adult Elliot, where Henry Thomas reprises his 1982 role. The ad hits all the nostalgic moments viewers would expect, including a bike ride across the sky. But for the win here for Xfinity. The 4-minute version on YouTube has more than 2.6 million views. Pretty impressive stuff. Coming up here on The First Trade, behind the scenes at Nordstrom. I go inside the C-suite with the president of Nordstrom to find out what the retailer is doing to bring in business this holiday shopping season. The tide may have finally turned at Nordstrom ahead of Black Friday. After years of investments online and in stores, Wall Street was positively surprised by sales and profits bouncing back in the third quarter. I had a chance to talk with Nordstrom's president of stores, Jamie Nordstrom, about the business and his outlook for the holidays.
Oh, it's a very big day. I think it's when a lot of families, after a long Thanksgiving day, want to get out of the house, and certainly going shopping is a big part of that. So our stores are really busy. The malls that we're in are really busy, and there's an opportunity to do a lot of business. And so it's super competitive, as you know, but we like that, and we're excited about this year.
What's the setup for Nordstrom this holiday shopping season? Black Friday through Cyber Monday, how are you planning the business?
In our rack stores, we have some flash events on NordstromRack.com that we think are really compelling. And then in our full-line stores, we've done a much more purposeful job than we ever have in terms of having a really compelling gift assortment. We know that most gifts are under $100 or under $50. So we've tried to have a much more rich, compelling assortment of those great price point gifts at some great prices all the way through the weekend.
What's your level of optimism headed into this holiday season? I'm sure you've been told a good bit, 6 fewer days this holiday shopping season, but the U.S. consumer seems to be pretty strong.
Well, we're retailers, so we're always optimistic. But again, we're focused on what we can control. We're focused on our customer. And we see some really encouraging opportunities out there for us to do a better job for them, taking more friction out of their shopping experience, having the right item, the right time, in the right place. We're always focused on that. And as we've started to do a better job of bringing all of our assets together to be more focused on serving customers in the market where they live. We started in Los Angeles last year. We just came to New York and lit up a number of capabilities that really for the customer, the way it plays out is most of the merchandise that they might want to buy from us, we can deliver next day, if not same day. And our ability to, again, continue to take friction out of their experience is leading to some big wins for us.
I think you surprised a lot of people on Wall Street with your third quarter results. Sales started to turn around. What started to work well for you guys?
Well, I would point to two things. One, our off-price business, our rack stores, NordstromRack.com and HauteLook. We've been really focused on the inventory efficiency there all year. That's really playing out. So that part of the business is really strong. In our full-price business, as I mentioned, our market focus, both in Los Angeles, which we started about a year ago, and more recently in New York. That's starting to play out in some inventory efficiency opportunities that we see, as well as I think we're acquiring some customers who say, boy, that's a more compelling way to shop. They make it easier for me. They make it more convenient. And in a place like New York, convenience is a luxury. And so if we can provide that, we think there's more business to be done.
What is that local strategy? You started, I believe, in LA. Where are you rolling it out the rest of this year and into 2020?
Yeah, we just most recently rolled it out here in New York. So we've got our flagship store that we opened last month. We have two Nordstrom local service hubs, one on the Upper East Side, one in the West Village, and then we have express services in our two rack stores here, so that really almost anywhere you are in Manhattan, there's a really convenient place to pick up your item or return it, or even get your pants altered. And we know that's a convenience that customers are looking for. We want to have that live in our top 10 markets by the end of 2020. We recently launched in Chicago, Dallas, and San Francisco, and we see opportunities to accelerate that going forward because the customers are really voting that's how they want to shop.
Do you think this is the turnaround a lot of people on Wall Street have been looking for you guys for some time?
Well, again, we look at our business over the long term. We've been around for 119 years now, and we're thinking about how do we create value and loyalty with customers over the long term. That's not about next quarter or next month. It's about doing a good job for the customer, giving them a great experience, making them feel good, and when we do that, they come back and buy more from us. We see a lot of opportunities to do a better job of that.
And the last time we talked to you was the opening of the new New York City flagship store. How has that opening been received?
Really great. I think the reception we've gotten from our customers here has in some ways exceeded our expectations. It's early days and we've got a lot to learn. We're listening to our customers, but so far it's been really great, and we're really excited about the opportunity to continue to grow the business here in Manhattan.
Now, Nordstrom stock is up about 12% since it reported earnings on November 21st, but it's still down 26% over the past year. It has been a struggle over the past year for Nordstrom. Yahoo Finance's Julie LaRoche will be live from DoubleLine Capital's trading floor this coming Monday. You can catch her exclusive interviews with DoubleLine CIO Jeffrey Sherman and veteran portfolio manager Monica Erickson all day here at Yahoo Finance. The opening bell is coming up here next on The First Trade. Here's a look at the action in overseas markets, and we'll be right back. Welcome back to the first trade. The opening bell is on tap. Futures are under pressure right now as investors try to decipher if we will get that phase one trade deal before the December 15th tariff deadline. Let's go around the bell now with Lizzie Dipp Metzger, affiliated with Eagle Strategies LLC and founder and president at Crown Wealth Strategies, and Noah Hammond, CEO Advisor Shares, along with our very own Jared Blickery at the Wi-Fi Interactive Board. Good morning to you both. Lizzie, what is your take on the start to the holiday shopping season?
Well, it looks to be good. Hopefully, it's interesting because the consumer right now seems to be disregarding some negative signs and looking only at the positive. At the end of the day, what you look at is what's happening at home, and there's record unemployment. People have jobs. They want to shop.
Yeah, I definitely saw that at Walmart. Was in the stores yesterday on Walmart. The crowds were there. Noah, let's get you into this mix here. I'm not seeing a lot of big moves in the retail stocks in the early going here. What's your take in the early going?
It feels like it's been a little bit quiet, at least from a foot traffic perspective. I know you're seeing some, certainly in some areas, and I don't have a sense of is more of that shopping being pushed online, but it definitely feels like I'm seeing more of a retail push from various different areas. I had 10 or 15 different apps send me notifications of Black Friday sales, and so there's a very aggressive push. I'll be curious to see what the numbers actually look like and where they're coming from, in store versus online.
Do you think there could be some downside risk to these retail stocks? If all these sales have shifted to online, that's a less profitable avenue for most of these retailers.
It's true, and they're price sensitive as well, so they're going to be buying some of the lower margin products. So it can make it challenging, but it's an improvement, right? When you're a company like a Walmart or a Macy's or a Target and you're trying to grow that online presence, you're probably willing to trade that off in the short term to build a bigger online presence and compete against Amazon.
Lizzie, do you have any interest in getting involved in retail stocks?
So it's an interesting scenario because what you have is it's kind of a tale of two cities. You have the retail stocks that are failing miserably, right, and the traditional brick and mortar, and then you have these really interesting companies such as Target, Walmart, those that are really adjusting and working with the convenience, the online. Those are the ones that we see that are going to have success in the markets.
How do you read through on Amazon? We haven't mentioned Amazon here. Walmart and Target are doing so many good things. Amazon stock ahead of Black Friday has lagged the market.
Right, and what happens is when you have, it's kind of like Netflix as well. As soon as you start to see that people are changing and adapting and competing, those traditional companies like Amazon aren't going to do as well as they had before when they were the only ones in the market.
Noah, do you essentially short the heck out of Amazon here? If Target and Walmart are doing so great, what do you do at Amazon?
I think so. So much competition ahead of them, not just on the retail side of things, right, on the cloud side of the business as well. So a lot more challenges ahead. Doesn't make them a bad company, but it might make companies like Target and Walmart a better opportunity over the next 5 or 10 years.
And there you have the opening bell on this Black Friday. The market is looking to open down about 60 points on the Dow, down about 65 points nonetheless. You made a good point, Lizzie, on Netflix. Do you hold Netflix? Do you like Netflix? The streaming wars are full in effect.
Yeah, so they are full in effect, and you've got Disney. I mean, my kids have been bugging me for a week and a half now to get Disney Plus.
Did you get it?
Yes.
Well, if you're a Verizon subscriber, our parent company,
Thank you. Because of Verizon, we had to reset our passwords. It was really special just to get the Disney Plus to save the $6 a month. So, and actually what you see is a lot of pressure in companies or against companies like Netflix. I don't know if the question, if we say hold on that, but I will say that you're going to see a lot of pressure with companies like Netflix in the future because it's the same play as Amazon. You got a lot of people finally saying, hey, well, let's get into this market as well.
Is Disney just the ultimate play here?
That's a good question because Disney seems to always come in and do so well, and they're seeming to get a lot of traction in this. And with doing things like giving it to free to a Verizon subscriber, after a year you're going to still be on the thing, and now your kids are not going to want to get off. Yeah. So I mean, I see a pretty interesting play in Disney as well.
Interesting. Jared, over to you at the Wi-Fi Interactive Board.
Yeah, we're looking at the NASDAQ 100 heat map here, and we can see the FANG cohort, except for Amazon, in the red. Apple's off 0.5%, Microsoft off 0.25%. But again, these stocks, as we know, coming off record highs. So not surprising that Amazon might be up because it is Black Friday here. Alphabet is down 0.5%. One standout is Starbucks. That's up 0.8%. We can see it's up 34% year to date. Still about 5-6% off of its record highs, though. And then if we take a look at the Dow here, we can see that Walmart is in the lead along with Nike, McDonald's, so definitely consumer names leading here. And then to the downside, the industrial company Caterpillar is down 1%, and then United Health, the second biggest contributor to the Dow by points, that is down 1%.
Hey, Jared, can you pull up an Apple chart real quickly? I think by most accounts, a lot of the data that I'm seeing out there, Apple and even to a lesser extent Roku are early winners this Black Friday.
Yeah, well, if we take a look at Apple here, I mean, this stock has been notching high after high, record high after record high, up 69% year to date, seemingly impervious to any bad news. You look at the pullbacks here, they're virtually non-existent as it's marched its way up here. It's been on an incredible run this year, and it's really been strong throughout thick and thin. The biggest drawdown it had was during the tariff escalation in May, and even this wasn't a very big drop right here.
Noah, back to you. We were just talking a little bit about the streaming wars. What's your big play on streaming in 2020?
It's a good question. You know, I have to say, at least in one of our all-short equity funds, HDGE, Netflix is our top short right there. Again, doesn't make it a bad company. It just means probably a lot of earnings pressure. I have not signed up for Disney Plus yet, but I have Hulu and I have ESPN Plus, so I actually can get Disney Plus and probably save a little money there. So I see Disney, the whole company overall, not just the streaming service, being a positive opportunity in people's portfolio. Netflix could continue to have some challenges ahead.
So it sounds as if you're almost betting that Netflix lags the market in 2020?
I think so. Yeah, I think so. I think they'll struggle quite a bit.
Well, Lizzie, you know, we had some news this morning from Tech Data that Warren Buffett was reportedly made a bid in here. We've had some M&A, a lot of M&A activity in recent weeks. Tiffany, Louis Vuitton,
right.
Schwab, TD Ameritrade. You think the floodgate is about to open over the next couple of weeks?
So, you know, what's interesting is this past year is we've seen these companies like WeWork, or we've seen these unicorn companies. There's a lot of faltering in that, but people are looking for solid investments, and they're still looking for it. So Warren Buffett was looking for it, and you're right. With the Tiffany play, it's the same thing. So I think what you're going to see is not necessarily floodgates, but what you're going to see is investments in solid earning companies that have a real background to be able to invest in, rather than pie in the sky.
You know what it tells me is, though, there is a lot of value still left in this market.
Yeah.
Despite the major indices being up, what, almost 30% on the year, Dow, NASDAQ, people still see value.
So, you know, and I have people ask that every day is, are we at the top? Are we at the top? How do we know? We have no idea whether we're at the top. All we know is that volatility will always be there, but there's always opportunities when you have solid companies with solid fundamentals, and that's what's important.
You know, when you talk to clients, do you get the sense that there's some FOMO getting ready to emerge, that fear of missing out?
Yeah.
You could see some money climb back into these markets, the next wave, let's say over the next 3 months?
Oh man, there's always fear. And it's funny, when it's down, people have fear. When it's up, they have fear. And you know, it's consistent and it's always right. That what you need to do is dollar cost average your money in, invest in a good basket of allocation, and diversify your assets. When you do that over time, you're always going to succeed.
Noah, what's your take on the M&A environment right now?
I think you'll see a lot more of it. Certainly, with interest rates being so low, buybacks, you know, being used with some of that cash flow that companies have, acquisitions could certainly be on the move. So you want to start to look at, and we saw it moving last week. Certainly, the small cap and the micro cap space could find some interesting opportunities either for your portfolio or for what we would see bigger companies making some target acquisitions in the space.
Any key ETFs you can highlight?
Well, so for our own in the small cap and micro cap space, we have two. SCAP is a small cap ETF, and DWMC is a micro cap ETF. That one has had an incredible year, outperforming the indexes. And I think, just like she mentioned, you know, you got to be smart about the basket of securities you want in that portfolio. I think we're continuing to move into a market, and we've seen that a little bit this year, where all the stocks aren't going to move up in unison. And so knowing what you have is important.
Jared, back to you.
Well, we have the NASDAQ 100 month-to-date heat map, so we're going to take a look at what's happened in November. Autodesk, a big winner here, up 22%. Regeneron up 20%, 21%, and we've seen healthcare really make a comeback. And then we have some big names like Baidu out of China, AMD, both up over 15%. To the downside, Expedia is a big loser, down 25%. Some of these are earnings stories, but let's go to the sectors, and this is going to be month-to-date as well. We can see healthcare in the lead, just edging out tech there, up 5.3% versus 5.2%. Healthcare really made a comeback this month. Financials, industrials, and communication services, those are all outpacing the S&P 500. To the downside, we have the defensive sectors, utilities, and real estate. 10-year Treasury yields up about 8-9 basis points this month net, had been up 28. And if we take a look at the quarter to date, similar story here. Healthcare up 10.6%, tech up 9%, financials, communication services, industrials, all outperforming, and that's why we have this incredible run here. Lots of breadth in the market, and that's not surprising while we're going to new highs just about every day.
Lizzie, one more for you. I'll leave it with you. I'll put you on the spot here. What's a good investment for the next decade?
For the next decade.
Or a theme.
Yeah, you know what? I think that you look at the U.S. and the U.S. itself, when we stick domestically, we've done really, really well. So if someone says, just give me one place to invest in, I would say the strong companies, the U.S., the large cap, the value. We really believe in that. We believe in strong fundamentals. And when you have that, it's really hard to fail.
Well, we will follow up with you in 10 years' time on
Good.
that play. All right, Lizzie Dip Metzger, always good to see you. Noah Hammond, always good to see you. And Jared Blickery, thank you. Coming up here on The First Trade, your cup of coffee may soon spike in price. Your commodities report is up next. We have some breaking news. Reports of shots fired on London Bridge. You're looking at some live photos of the scene on the ground right now. Police have closed off part of the city. They're saying they are in the early stages of dealing with the incident. You're looking at live photos of that incident unfolding right now on the London Bridge. We'll keep you updated as we get more information. Let's head back down to New York Stock Exchange and check in with Yahoo Finance's Inez Ferre. Inez?
Brian, we're looking this morning at Luckin Coffee after its price target was increased at Morgan Stanley to $27 from $21, with the analyst note citing strong growth momentum and also saying that app downloads for the last month hit a record. Also, Peloton this morning hit an all-time high. Its price target was raised to $35 from $29 at Baird. Baird initiated coverage of Peloton last month with a buy rating, citing its strong engagement measures. And also, we're watching this morning VF Corp, the parent company of Vans. It's reportedly among one of the bidders for the Italian luxury shoe brand Golden Goose. This is according to a Reuters report, and Golden Goose is accepting bid offers until mid-December. So VF Corp is reportedly one of those bidders, Brian.
Doesn't surprise me there. VF Corp is an acquisition machine. Inez Ferre, thank you.
Thank you.
All eyes on oil today ahead of a key OPEC meeting later next week. Yahoo Finance's Jared Blickery is back at the Wi-Fi Interactive Board with today's commodities report. Jared?
Yeah, we have oil down 2.5% now to close the month. Still should end up with a monthly gain, but that is eroding quickly. And we can take a look at the overnight price action. Let's take a 2-day look here, get a little bit of a perspective. We can see that it's been a sharp drop off. You know, when you look at crude oil, and again, we do have that OPEC meeting next Thursday and Friday, which coincidentally is also going to be the listing date, the IPO date of Aramco.
Oh, Aramco, come on, Jared.
Well, they're not doing a very good job at getting the price of oil up into that. So the latest talk around the OPEC Plus meeting is that they might extend the production cuts, but they're probably not going to talk about deeper cuts. And then there's going to be some talk about how they're measured. The bottom line is it's probably not going to be that bullish for oil, and we see it down right now. By the way, Aramco is 75% oversubscribed, but that's not a big deal. We've seen these offerings 20 times oversubscribed in the past.
Jared, you're also watching coffee. Please do not tell me my Starbucks coffee is going up to $10. It's already $6.
Yeah, it might have gone higher already. So let's take a look at the 20-day price action here in coffee futures, and we can see that there's been a steady climb since about the mid-month. You look at coffee, it hit basically a decade low earlier in the year, and it's been on the rise because the planting season in Brazil hasn't had as much water, about 59% as usual, and also there was such a glut that people simply didn't put it in the ground as much. But the bottom line is coffee is definitely marching higher here, so watch out for that cup of joe.
Sounds like I should be stockpiling some beans in my place. Jared Blickery, thank you.
Got it.
Retail stocks are a major focus as one of the biggest shopping days of the year kicks off today. Joining us to discuss is JLL Retail President and CEO Greg Maloney. Greg, good to see you here. So what's your take on the start of the holiday shopping season? To me, online has come out strong, but the foot traffic at a lot of these stores, maybe not so much.
Well, starting out at 6 a.m. this morning, it was very busy at a lot of shopping centers. I went around some here in Atlanta. The parking lots, by the time I left, for most of them were about 80 to 90% full. So there's a lot of bargain shoppers out there very early, but it continues at least through 9 o'clock when I left the last shopping center a few minutes ago.
In terms of winners and losers, where do you see them right now?
Well, the winners are always still going to be food and beverage. You're going to have, which is way up. As far as retailers go, it's everything about value and everything about luxury. Sort of the middle of the road, sort of the things that have been around for a long time, those are the stores that are really suffering. So if you have something new and exciting and it has value, you're going to do well this year. How do you think the remainder of the holiday shopping season will play out? Well, a lot of people were saying because we have 6 days shorter, it's not going to be as good. You have to remember, Black Friday itself is about 1 week of sales during the normal year. So I think we're going to see a lot busier because of shorter days, and I think it's going to be a very good holiday season. We're expecting somewhere around 4.5 to 5% increase in sales over last year. You know, Greg, you oversee a good bit of real estate, commercial real estate. What do you think will happen going into the early part of next year? Do you think we get a new wave of store closures? All indications this was another holiday. This will be another holiday shopping season with a lot of online sales, potentially the less need to have a lot of stores open. Well, I think it'll continue to consolidate. I think like I said before, ones that can give the consumer what they want, they'll continue to do extremely well. We're seeing a lot more openings than we are closings. We saw that in 2018, and we're also seeing it in 2019. So what we're doing is recycling some of the retailers that aren't really doing that well, and the ones that are doing well, they're opening more stores, and we're getting a lot more product in there. Remember, pure play online retailers are expected to open about 850 stores here in the next 5 years. So we're going to see it continue to absorb some of the square footage that these closures have produced for us. And Greg, a lot of these anchor stores or the department stores, JCPenney, Macy's, they have struggled this year, and they have suggested they're looking to close more stores next year. What type of pressure does that put on the overall real estate market? Well, the A product, it doesn't put much pressure on. It's that B product, that tertiary, the sort of secondary markets, puts a lot of pressure on those shopping centers. But remember, a lot of these department stores are not paying a lot of rent. They were really traffic drivers. That's why we call them anchors. So as some of these close and we can repurpose that space into more productive rent-paying tenants, it does quite well. But there are going to be closures of additional department stores. We're anticipating it in 2020. So I think we'll be fine. We've been very resilient here in the past 5 years, and I think we'll do the same in the next 2 to 3 years.
All right, Greg Maloney, good insights. Get out there and shop.
Thank you. You do the same.
Thanks. Coming up here on The First Trade, it's a retail roundup, the stocks you should be looking out for on this Black Friday. Taking another quick check of the markets here, you're seeing a sea of red across the screen. The Dow, S&P 500, and NASDAQ are all in the red. We'll be right back. Here are the companies and stocks the Yahoo Finance team is watching for you today. As no surprise, all of our companies and stocks to watch on Black Friday are retailers. Yours truly was out in the stores all day on Thanksgiving to see if people were shopping and where. Here are some of my takeaways. Several of the Walmart stores I visited were nicely packed. It's an inexact science here measuring store traffic, but the crowds just felt stronger versus a year ago. Roku-powered smart TVs were flying off the floor, as were all things Disney Frozen 2. If you were looking for signs the jobs market remains healthy, Walmart on Thanksgiving Day Eve proved that to me. One of the biggest lines I saw yesterday was not necessarily at Target's cash registers, but Target's online order pickup department. Target stock is at a record high in large part because it has cracked the retail code of seamless and shopping between stores and online. As for today, Target is touting deals for the Apple iPhone 11 range, Samsung Galaxy S10, Note 10, and Google's Pixel 4 lineups, as well as some smart TVs. And on its website, it's offering a 20% off coupon via email when you spend $50 in hopes to lure people back to the stores between December 3rd and the 14th. Smart. A shout out to American Eagle Outfitters. A newly remodeled store at Long Island's Roosevelt Field Mall was completely remodeled ahead of Black Friday. The store looks totally different, way more vibrant, but what really caught my eye is the new jeans customization shop inside the store. That's a nice win there, and it says a lot on why American Eagle has done so well the past few years. It's just doing things rivals aren't. And you guessed it, I was in line at JCPenney when it opened its doors at 2 p.m. The lines were snaked around the store, which has become the norm since JCPenney started opening early on Thanksgiving back in 2014. My sense is that the crowds weren't as robust as when I waited outside and froze my butt off last year, and some of the stores were flat out empty when I returned in the evening. The company looked heavy on inventory, so look out for good markdowns in the weeks ahead. All in all, it will probably be another tough holiday season for Penny. And I'm saving the worst for last. Shame on Gap for what it is offering customers this holiday season. What I saw in the racks at Gap stores is perhaps the worst winter assortment I have ever seen from this company. And believe me, I've seen some real duds from Gap through the years. The products are bland, uninspiring, and lower in quality. I fell asleep looking at the stuff. Everything that is wrong with Gap right now is showing up in its stores today, and Old Navy. After ousting its CEO a few weeks ago, hopefully it's interviewing CEO candidates with strong merchant backgrounds. Get some stuff in the store that people want to buy. And those are your companies to watch for Friday, November 29th. And you're looking at a quick video of the Kmart that I visited down below Verizon Media headquarters. As no shocker there, this store was completely empty. I also went to a Kmart yesterday at 6 a.m. Kmart's been opening at 6 a.m., I believe, over 20 years. But again, this store, Kmart, not looking too hot. Not a lot of shoppers, despite all those Black Friday deals. Black Friday deals across the board at this particular Kmart. And I was looking for people to talk to. I just saw one, I don't know, somewhat guy senior in age looking for a deal. But for me, it was pick up a couple Red Bulls, some coffee, and back into the office and talk some stocks. Kmart, not getting it done. Coming up here on The First Trade, saving big bucks with the new kicks. Yahoo Finance's sneaker guru Reggie Wade will show us the best way to save on a new pair of sneaks. Black Friday sales include huge discounts on athletic wear, including sneakers. Popular brands like Nike and Adidas are offering big discounts this year, with some as much as 60% off. Here to break down where to find those deals is our very own sneaker guru, Reggie Wade. Reggie, where are the deals at?
Well, right off the bat, I could tell you, it says 60% off. You're going to want to go to Dick's Sporting Goods. Dick's Sporting Goods having a sale, 60% off, and that's probably the deepest discount you'll see around this Black Friday as far as sneakers going, but some of the other major brands also having good deals. Adidas offering 30% off most of the stock, including the very popular Ultra Boost. That includes the Ultra Boost 2019 edition. That's been a great seller for the three-stripe brand. Nike has 50% off select sale styles and also extra 25% off select sale styles when you use the code SEASONMVP at checkout. You can get the Air Vapor Max Plus, which has been Nike's top seller this year, at $122.97, down from $190. You can also get the Nike React Element at $83.97. That's down from $130. So some good deals out there. Foot Locker, you could get 20% off with no minimums and free shipping on your orders, and an extra $20 off when you use the code THANKS20. Also, we have Timberland getting into the action. Timberland's not a brand that you think of when you think sneakers, but they're having a pretty good sale on their weatherproof Brooklyn sneaker series.
Those are cool, Reggie. I like those.
Yeah, Brooklyn's in the title, so I'm a Brooklyn boy. I'm going to have to get a pair. So you can get those right now. Retail is $150. You could get them 30% off this Black Friday.
Reggie, are these normal discounts? The discounts you just mentioned, to me, seem pretty significant.
They are, and that was something as a sneakerhead I was very happy to see, because sometimes, as you said, with Gap, these companies advertise Black Friday, but then you look at the deals and you're like, oh, these are not really deals, but you could really get some steals on some sneakers this Black Friday if you use some of these discount codes. And off the bat, some companies don't even need you to bring codes. Adidas, you just go on, 50% discounts right there.
Reggie, don't tell me you bought any more sneakers.
Maybe one or two pairs. One or two pairs, that's it.
All right, Reggie Wade, have a good weekend.
You too.
An update on the London Bridge incident we mentioned earlier. Authorities stopped traffic on the bridge after reports of a fight breaking out. You're looking at some pre-recorded shots of the incident there. Others reporting shots fired, and officials say they're in the early stage of dealing with the investigation. Several people believe injured after the incident. This is the same location of a terrorist attack in June 2017. We'll keep you updated as we get more information. And that's it for the first trade for this morning. I'm Brian Sozzi. Go out and shop at that mall. Now let's get one more check of the markets with Inez Ferre down at the New York Stock Exchange. Inez?
Brian, it's all about shopping today. And a note from Wedbush's Dan Ives says that the Apple AirPods are going to be a hit, that demand is surging, saying that Apple is on track to sell more than 65 million AirPods this year, predicting that it's a clear star for Black Friday and this holiday season. We're watching Amazon this morning. Amazon will be hiring, by the way, 200,000 seasonal workers to work in the warehouses, to pack boxes, to deliver packages. That's double the number that they hired last year, expecting a strong fourth quarter. Also, Reuters is reporting that Amazon is working on a faster data center processor chip using technology from SoftBank's ARM Holding. And if successful, that would make Amazon less reliant on Intel and AMD for server chips. And then we're also watching VF Corp, the parent company of Vans. Reuters is reporting that VF Corp is one of the bidders for the Italian luxury sneaker brand Golden Goose. Golden Goose is accepting offers until mid-December. Make sure to stay with us. The Ticker is up next with Adam Shapiro talking about Black Friday. Stay with us.
Welcome to The Ticker on Yahoo Finance, the musical, better than Cats. I'm Adam Shapiro. Too much turkey yesterday. It's a shortened holiday trading session for us and for the U.S. markets. Both the New York Stock Exchange and the NASDAQ will close at 1 p.m. New York time. Let's check the markets right now. You can see that we're trading down just a little bit, and a lot of this might have to do with what happened in the discussions with China. Let's get to that right now. Hong Kong protests are weighing on the discussions between the United States and Chinese negotiators. Thousands of demonstrators staged a celebratory rally after President Trump signed legislation aimed at supporting human rights in Hong Kong. China's vice foreign minister calling the act, and this is a quote, serious interference in China's internal affairs. He's also urging the U.S. not to implement the legislation in order to prevent any further damage of the relationship between the two countries. Joining us to help digest all of this is Jason Rotman, director at Everplus Capital. And Jason, you like to point out that in the United States, whenever we're in an election cycle, people say it's the economy, stupid. But that now plays into how China reacts to the moves we make. Is that accurate?
Well, my point, Adam, frankly, is not so much in that. My point is that if we look at the data of China's GDP growth, now obviously China's GDP is not negative, it's still growing, but China's economy is growing at the slowest rate it has ever grown since the early 1990s. So when you look at the politics of what China is focused on, in a sense, it's not the politics of U.S. passing these two pseudo-symbolic bills saying that we're not going to be able to sell rubber bullets to Hong Kong authorities anymore. That's not the biggest deal in the world. It's a symbolic, meaningful gesture by Trump, showing the world that we stand with democracy. At the same time, China's not going to let that affect its goal towards having a trade war resolution with the U.S. because, again, China's economy needs a boost.
So before I get into the next part of this discussion, as I'm looking at the indexes right now, the Dow, the NASDAQ, the S&P 500, they're down, not dramatically. I mean, let's be real. We are at record highs that we're coming off of right now. Why are people, do you think, selling today? Just taking profit? Is it related to China, or is there something else going on?
Well, good question. You know, I think since time immemorial, the markets, the stock market does not like uncertainty. And there's a small smidgen of uncertainty that's been added by these, kind of surprise two bills that Trump signed. So with that smidgen of uncertainty, there's a smidgen of selling. As you correctly noted, we're not, the Dow's not down 500 and all heck is breaking loose. It's minor profit taking. If you look at the major retailers, Amazon, Walmart, they're all up, which is a sign of the market has some confidence that this Black Friday is going to surpass last year's sales. So that's kind of what, if you look at the leading indicators from an economic standpoint, from a Black Friday standpoint, we're seeing the markets happy.
Okay, so let me get back to a specific question about China, though.
Sure.
Try, and I realize this is speculation, but you follow these issues. Get in the mind of someone, say, like Liu He. What are the Chinese thinking? What do they care more about? Is it ending the trade war before the 2020 election? Is it just preventing the December 15th tariffs, or is there something greater at play?
Well, they care about having their economy grow. I mean, long gone are the days of 8, 9, 10% GDP growth, and everybody's looking to China as this economic miracle, or in other words, not so much a miracle. They look at the U.S. as an economic miracle, justifiably so, but an economic juggernaut. The world doesn't really look at China like that anymore. China needs, and this is the genius of Trump from an economic standpoint, China needs the U.S. to help fulfill China's growth objectives from an agricultural import standpoint. I mean, the U.S. is one of the largest exporters of agricultural products on planet Earth. China's one of the largest consumers of agricultural products on planet Earth. So China's looking at, first and foremost, resolving the trade war from a macro top-down perspective to reduce the cost of imports to China and reduce the cost of exports from China, thereby stimulating its own economy on both sides.
All right, Jason, we appreciate you bringing us up to speed on that. Hope you had a good Thanksgiving. We will see you soon.
Thank you, you too.
Coming up, how Warren Buffett and Berkshire Hathaway got outflanked in their bidding war for tech data. You want to stay with us on that one. Welcome back to Yahoo Finance, the ticker. We want to get to our big three tickers, and Jared Blickery is standing by at the Wi-Fi interactive screen because Warren Buffett's Berkshire Hathaway, they got outmaneuvered by one of the world's private equity giants, Facebook revealing details behind a widespread outage for Facebook and Instagram users, and Aurora Cannabis cutting the ribbon on a massive new flagship store in Canada. Fill us in on all of this.
Well, it looks like Warren Buffett got outbid here, and CNBC was reporting that Apollo had initially put down a $130 per share offer for this company. You can see it's at $145 now. There was a mystery bidder last week, and I think this is all illustrated by this chart here. So this is the $130 offer when the stock jumped up from its previous price there. Mystery bidder, which was Warren Buffett, we found out this morning, he came in and offered $140, and now he's been outbid by Apollo once again at $145, and that is the current price right here. We can see just about, you round it up, and it is $145. Now, does this make sense for Warren Buffett? Probably, but it's always a question of what price, because Warren Buffett doesn't like to overpay. He overpaid in the Kraft Heinz deal to make those two companies public. He didn't overpay for Heinz, but he did overpay for that combination. But other than that, he has a pretty stellar track record here. He has $128 billion in his war chest, and investors have been saying, what are you going to buy next? Well, if he doesn't see it, he's not going to force it. He tends to buy when there's blood on the streets, and right now with the stock up to 145, probably not seeing that blood on the street right now.
Well, he has over $120 billion sitting off to the side. It is Black Friday and people go shopping, so what else might he be paying attention to?
Well, I can tell you what he was paying attention to before, which was Occidental Petroleum. Let's go over this deal, because even though the stock is down considerably, it's down 10% over the last 3 months. Year to date, it's down 36%, and this is when the deal was being hatched with him. He invested, I believe, $10 billion, but he's also getting an 8% coupon on that. So Warren Buffett, despite the stock price going down, is going to be made whole. Back in the financial crisis, he was investing in Goldman Sachs and Bank of America at very opportune times, made money on both of those transactions. So it may be the case that he's simply waiting for the economy to roll over and to get those value stocks down even more to where they're really that much more of a bargain. So let's take a look at Berkshire Hathaway stock here. This is year to date, and basically, if we go back 1 year, it's been testing its record highs just below the $340,000 per share mark. They also have the B shares, which are affordable for people like you and me. But financials have really had a nice run recently, and that has to do with the expanding yield curve that we've been talking about, rising bond prices or bond yields, and financials as a whole are within spitting distance of actually eclipsing their all-time high, which was in 2007. And Berkshire Hathaway happens to be the largest component of XLF. A lot of people don't know that. They think of the big banks like JP Morgan and whatnot. But Berkshire Hathaway is essentially a financial stock, and it's enjoying a run-up with all these other large banks right now.
Jared, thank you. We're also watching Facebook, the social media giant, restored service to its users after Facebook Messenger and Instagram, those platforms experienced outages. Now, the company blames the problem on its software system. Dan Roberts is with me, and it happened during Thanksgiving. Sounds like a horror movie, right?
Terrible. I mean, if you're Facebook, this is the worst time for this to happen. However, I think we've already moved past it. I mean, it's funny. This story reminds me of the outages that Disney Plus had on day one, which arguably was much worse. I mean, that was day one of the service, and all the news outlets reasonably kind of ran with it, and they made that the headline on launch day was, oh my God, it's launch day of Disney Plus, and they're having outages. This is so terrible. But Disney kind of twisted it into a humble brag and tweeted out something like, sorry, the demand is much higher even than our highest expectations. And now, a week and a half later, no one's really talking about it. Same with this. I mean, it's not like Facebook stock was affected by this, but you don't want to have it on Thanksgiving when people are posting their family content.
Yeah, this camera angle makes me look fat, by the way. I just saw it on the monitor. And it's not because I overate yesterday. Post-Thanksgiving. Let me ask you this question, though. It's not as if, and you point this out, Instagram users, and we had people in the newsroom talking about the fact that during the Macy's parade, they were all saying, I can't post my pictures. It's not as if those people are going to be running to Snap, is it?
No, I don't think so. Although, separately, Snap has been on a little bit of a comeback, and I've been very surprised by that. I mean, I think a lot of people, including me, left Snap for dead, but the age demographic there is really the answer. I mean, I've aged off. Yeah, I mean, I'm 32. It's not for me anymore. That's clear. And I think Snap is having a little bit of a resurgence. But you're right. I don't think that it's an either or with Instagram anymore. It's not an alternative to Instagram. But it is a reminder that when Facebook has an outage and it affects all its different properties, I mean, I still think there are a lot of Instagram users who are blissfully unaware that Instagram is owned by Facebook. They say, oh, Facebook's bad, fake news, misinformation. I'm deleting Facebook. I'm going to use Instagram instead. It's like, okay.
Let me ask you about this, because I use Spotify. Yesterday, I was listening to Christmas music, The Jew Who Loves Christmas, and I got to tell you, it died. It just went dead. And I was doing it through Sonos speakers, and so I direct messaged Sonos, and they said, this is a Spotify issue.
Nice to
We're
be
trying
able to blame the
but
software.
It was, but apparently this was some kind of Spotify thing across the board.
Yes, and Spotify really hasn't provided that much information about this, but similarly, I think these companies experience outages, apps experience outages. You're really angry and frustrated, but how many people, when it happens, actually say, okay, now I'm going to delete my account? But it happened to us too. I was trying to play Spotify and I experienced the outage. Similarly, everyone where I was at Thanksgiving was saying, oh, wait, Instagram is down. I don't know if that says we're all on Instagram, but I think it was mostly an East Coast thing for Facebook. All of this does remind me, do you remember 2 years ago when there was an AWS outage? For like almost a whole day. And it was like half the internet went down. Right. And it was a reminder of just how many things are powered by Amazon Web Services.
Just because of the experience I've had both with Sonos and Spotify, I was wise enough to know they'll fix it. Right. Just wait. I submitted the error report, and when I got back from Thanksgiving dinner, of course, it was fixed. Dan Roberts, thank you. Our next ticker of the day is Aurora Cannabis. The marijuana company is opening its flagship retail store at the West Edmonton Mall in Canada. That's the largest mall in North America. The 11,000 square foot space will host cannabis researchers, chefs, and experts. Heidi Chung is with me now. And Heidi, so what is this, what does it say about Aurora's future in the industry? It's the largest store. It's not the largest mall in North America. Correct me. Is it the largest mall in North America? I thought that was Minneapolis.
No, it is the largest mall in North America. I think the Minneapolis Mall is the largest one here in the U.S. I mean, 11,000 square feet, that's a lot of places to shop, Adam. But when we think about the cannabis industry and what this sort of means for Aurora, I think we can safely say cannabis companies have realized that they really need to diversify their businesses from what they have been doing, because it just has not been working this year. We've seen a lot of cannabis companies essentially go up in smoke. The stocks are sinking and really underperforming the broader markets here. We have Aurora Cannabis down almost 50% this year. And so these companies have realized that, sure, while we can still continue to try and sell the classic marijuana flower, we also need to do other things to sort of bring in more revenue. So specifically for Aurora, the company announced quarterly results on November 14th, and it was not necessarily a really pretty picture. The company also announced that it would halt construction of 2 facilities, one in Alberta and in Denmark, and they were looking to save about $200 million there. Now, this new mall store that's the retail store that has opened in this mall in West Edmonton is looking to be a really immersive experience for customers, not just a retail store where they'll be selling their products, but also one where they will be inviting a lot of different figures that could make this a very much more experiential place for consumers. Now, one thing I do want to mention when we talk about Aurora, we also have to mention that back in March, activist investor Nelson Peltz was announced as a strategic advisor to the company, and that day the stock soared 14%. And as we know, Nelson Peltz has a very, very long history within the consumer packaged goods space. So a lot of people were speculating at the time that this partnership with Peltz and Aurora would lead to more diversification when it came to Aurora's business. This could be what is playing out right now, but of course we'll have to see if it is successful down the line. One thing I do want to mention as well, back on November 14th, when the company released quarterly results, at the time we heard Chief Corporate Officer Cam Batley say that the past few months have been challenging for the broader cannabis industry between issues of governance, evolving consumer demand, and provincial retail bottlenecks. There has been no shortage of negative news. But Adam, when we look at the cannabis space, it hasn't just been the past few months. I would say it's been just the broader year. In 2018, cannabis stocks had a really good year because there was a lot of speculation about what was to come, not only the recreational use of marijuana being legalized in Canada, but also a lot of businesses were investing here in the U.S., and they were hopeful that the regulators would actually recognize CBD as well as other THC products, but that just hasn't come to fruition yet. So we're seeing a lot of these cannabis companies sort of struggle to find their footing here, but this could be some good news for the space overall.
Good news, but you point out some real, hurdles there. You've got the legislation tied up in Congress just to let, legitimate legal businesses in the states bank in the federal system, and also now the CDC raising some red flags about CBD. We'll be talking about that, I'm sure, in December as well as 2020. Heidi, thank you. Coming up, holiday spending is already appearing to bust through records. A top expert joins us on which companies are seeing the biggest pop. That's next. Welcome back to The Ticker. We're going to go straight to Inez Ferrer on the floor of the New York Stock Exchange with a few special guests. Inez?
Yeah, that's right, Adam. It's Kids Day here on the floor of the exchange, and we've got some special kids here. These are Gordo's kids.
Gordo's kids, Brendan, Christian, Elizabeth.
And Pete Tuckman.
They're the only people I'm taller than here on the floor of the Stock Exchange.
Pete, this Black Friday, digital sales expected to hit records. Is this a strength of the consumer?
Clearly, it's obviously consumer sentiment is good, the condition of the consumer is good, low unemployment, stock market up. It just seems, the market tells us what it thinks here. Even though we saw a little bit of a sell-off this morning, there is potential for this market to sort of hit up against resistance, but we're not seeing it here. Market's trading on record highs, and it's Black Friday, and people are spending.
Even without a phase one trade deal?
You know what I've been telling you for the last couple of weeks? I think we're disengaging phase one, phase two. The deal or no deal story is out of the picture. Right now, the consumer is in good condition. It's Christmas. It's beginning to feel a lot like Christmas. Thanksgiving's over. We're on a roll here.
All right, let's find out what the favorite toys are for the holidays.
Favorite toy, guys?
American Girl.
Favorite toy, Christian?
A Nintendo Switch.
Nintendo Switch.
Mario.
All right, there, you heard it here. Those are the favorites. Adam?
Inez, thank you very much from the floor of the New York Stock Exchange. And just a reminder, it's 3-for-1 kids special at the Stock Exchange this morning. It's Black Friday after all. Coming up, it's already looking like a record haul for retailers as Black Friday shopping frenzies are underway. Shop till you drop. A top expert will tell us which companies stand to score the biggest windfalls next. It's now time for our ETF report, brought to you by Invesco QQQ. Today we're watching the SPDR S&P Retail ETF. ETF is up nearly 10% this year as Adobe Analytics forecasts that shoppers will have spent over $4 billion online this Thanksgiving. Now, Adobe also expects total spending to surpass $57 billion. Joining us to discuss this is Erin Sykes. She's a retail and sales strategy expert. And Erin, the season is record-breaking, so do the early sales contribute to this, or is there something else at play? Explain this to us.
Absolutely. Because we have such strong positivity right now and the consumer is so strong, we've already seen a 20% beat over this time last year. So just between 5 p.m. last night and 5 a.m. this morning, $2 billion were already spent on Black Friday sales and on holiday in general. So now we're up to about $4.5 billion, and we're going to see about $60 billion spent during the holiday season.
I want to get into these numbers because we had a guest on earlier this week who said the whole holiday shopping season is going to be around $730 billion, with something I think the figure was about $180 billion through e-commerce. But yet, online sales for the months of December it's going to be November and December, will only be 15% of total dollars spent. So how do I put that in the context of retail is dead? Doesn't look dead to me, at least brick and mortar.
No, it's not. And, what I think is really interesting now is retail is changing so much so rapidly that people are tracking things very differently. There's e-com and there's mobile, and then there's also brick and mortar. So we really have 3 different sectors here. And we're going to see about between the combination of mobile and e-commerce, and then also split 50-50 to brick and mortar. So kind of combining those 2 verticals, or some people split them apart. So the long short is that people are buying every single different direction they can. They might be walking through Target and looking at things in person while simultaneously shopping on Amazon, which helps you price compare and really get the best deals.
And I think it's easy for a lot of us to make the mistake of using the word shop, meaning that we actually closed the deal, and that doesn't mean closing the deal. Shopping is one thing, actually spending money is another thing. So when I think all of us do this. We go into a store, we look for different prices on our mobile device, and then we actually decide whether we're purchasing or not. Is there a closure rate for people who do this that the stores are using in order to try and entice that they get the deal done when you're inside a brick and mortar?
Absolutely. So you'll notice, especially now that we have AI and different analytics and bots available basically via e-commerce, if you leave your shopping bag open, you will get repeat reminders, either via text message or via email saying, oh, you were looking at this sweater. Are you sure you don't want to buy it? Here's an extra 5% off or 10% off. So there's going to be a lot more activity in terms of being able to actually close that sale rather than just filling up a shopping cart and kind of letting it die out.
And if you were going to give us a headline as we wrap up here for what we're going to experience, not just today, but then we've got Cyber Monday coming, what would the headline be?
Shop and shop early, because the consumer, as we've repeatedly said, is so strong. And this is really an opportunity because we have low unemployment and people actually have money to spend. It's an opportunity to leverage that and get good deals, because that makes all of the retailers much more competitive with each other, so the consumer continues to come out on top.
I fudged a little bit because I do have a quick follow-up. We don't break down consumers who use their credit cards for all of this, which is most of us, the percentage of that credit spend that might be for necessities like food and gasoline versus discretionary, like the gifts we're all buying now. Why don't we do that? It would just be too difficult? Because wouldn't that give us a better representation of the true health of the consumer?
Well, we have a lot more ways to spend right now because of PayPal and Venmo and credit cards and, currencies coming out like Libra and Bitcoin. It's getting actually increasingly more difficult to track. So I think that's something that we should really look at as the United States, as people in this industry, because we have to figure out how to best measure each of those different spending habits.
Erin, we hear you loud and clear. Appreciate your being here on Black Friday, the day after Thanksgiving, and hope you had a good holiday.
Thank you, too.
Coming up, the number of phishing attacks is skyrocketing as the holiday shopping season is now well underway. A top cyber expert will join us on ways you can avoid becoming a victim. Welcome back to The Ticker. I'm Adam Shapiro. Let's give you a quick recap of the tickers we've covered on the show today. First up, Berkshire Hathaway. It has lost out in its bidding war for the Florida-based company Tech Data. Private equity giant Apollo Global Management, they scooped up Tech Data for $145 a share. They beat an offer from Berkshire, which had offered $140 a share. Second was Facebook. The company is coming out with an explanation for extensive user outages on Facebook and Instagram, which took place during Thanksgiving Day. They blame the problem on one of their central software systems. Our third ticker, Aurora Cannabis. The Canadian pot company is officially opening its flagship retail store. The 11,000 square foot location in West Edmonton, Canada, will offer buyers more than 40 different types of cannabis products. We're going to check the price of oil right now ahead of the OPEC Plus meeting in Vienna next week. Crude is apparently right now trading down. We are at $56.34 a barrel. We're off about 3% since oil started trading. Meanwhile, Chevron is gearing up to sell its stake in 2 Nigerian offshore blocks, according to Reuters. Now, this comes as the energy giant shifts its focus on U.S. production. Chevron is up more than 8% year to date. Black Friday traditionally marks the start of the holiday shopping season, but with a reported 39% of people snagging their deals early this year, it's best to stay on the lookout for cyber criminals. Joining us now is Threat Labs team research lead at Zscaler, Deepan Desai. And it's good to see you, Deepan. Zscaler found a 400% increase. I want to repeat that. 400% increase on the phishing attacks that took place between October 14th and November 14th of this year. Describe to us what those phishing attacks would look like. Were they just emails with click on this link and then give us your data kind of stuff, or was something else up?
Sure. So what we saw over the last 30 days was increase in emails containing the links to those phishing pages, where the users were being offered amazing deals. They were being offered free gift cards if you were to submit all that sensitive information. We also saw a lot of activity in one of the newer trend, which is mage card attacks. This is something that has been on the rise since last 5 years, where the gang is targeting some of the major retailer websites. And what they do is they will inject a piece of code that will steal the credit card information when the user tries to perform that transaction. So when you try to purchase a product, your credit card information is what gets stolen. This is an example where Macy's suffered this type of attack a couple weeks ago. And then the third area where we're seeing a lot of activity is where the mobile users are receiving SMS messages containing this similar phishing links, where the attacker is basically trying to take advantage of this smaller form factor of the devices.
Let me ask you this, and I want to break it down. So I think we've all seen those phishing emails with the link. Just by clicking on the link, do we put ourselves in jeopardy, or is it once we've gone there and then we give them the personal information? Because I think a lot of people, once they've hit the link, realize there isn't the security safe lock up in the browser and get off. So which is it?
So it's both. As soon as you click on the link, you are basically confirming that this email address is legitimate and the user fell for clicking on the link. The part that hurts the most is when you actually enter your user credentials on the website. But even by the virtue of clicking the link, you are in a way submitting an information that the attacker could use for future attacks.
We set ourselves up for future attacks, but to reiterate what you said there, it's at that point where if you back out, you still haven't given them the credit card number or the home, those kinds of things.
Right. Yes.
Is one way to protect yourself to always look in the browser for the safety lock?
Right. So there are a few things that I would recommend over there. Look for the safety lock. Always check on the full domain because what they will do is they will use a overly long domain name like paypal.com-something.xyz. Right? So don't just rely on the first part that's visible, say, for example, in your mobile browser. And then the second thing is always have two-factor authentication set up on your accounts.
All right, two-factor authentication is now, it's almost prolific, and it sometimes seems like it might be a pain, but imagine the pain when you have to clean up a mess after someone's stolen your stuff. Deepan, thank you very much for joining us.
Thank you.
Straight ahead, it's the Apple product that's being called the Clear Star of Black Friday. Details on how much it could boost Apple's bottom line, that's coming up next. Welcome back. Let's get to our next group of tickers. Apple will have the Clear Star of Black Friday products. That's a quote. According to one major research firm, Under Armour is scoring a bullish new call despite the big problems that they face, those recent woes. And UPS revealing fresh estimates on the eye-popping number of packages it's expected to deliver this holiday season. Dr. Evil, with the pinky, million has nothing on UPS with the number of packages they're going to deliver. But first to Apple. Wedbush analyst Dan Ives predicts the tech giant's new AirPods will be the, quote, Clear Star of Black Friday this year. Heidi Chung is back with us. Heidi, tell me about demand for the product, and I have to fess up here. I bought a pair this morning.
Apparently want them and are on their Christmas list, Adam. So according to Dan Ives over at Wedbush, he is saying that the AirPods are the clear winner when it comes to not just this holiday shopping season, but the rest of this year as well into next year as well. So he is estimating that Apple is on pace right now to sell over 65 million AirPods in 2019 and is now on pace to potentially reach 85 to 90 million units sold in 2020. Now, he is also noting that AirPods right now are also on pace to represent 4% of total revenue for the tech giant. And so he's saying, well, you know what Wedbush did? We went to several different Apple stores here in Manhattan, and we spoke to a lot of different consumers, and they are telling us that the AirPod Pros are extremely good in quality, and thus people are saying that the demand there is really, really going to skyrocket in the coming months and the year ahead. And he also estimates that because the demand for the AirPods are so great and the AirPod 2s are set to sell a lot this season, the regular AirPods are probably going to go on discounts at a lot of different retail outlets. Now, he currently has an outperformed rating on Apple stock with a $325 12-month price target. Now that represents about a 20% move higher from current trading levels. But he's not the only bull on Wall Street when it comes to Apple, Adam. We have 27 buys, 14 holds, and 7 sells on Apple's stock right now. And Salesforce also, I want to mention, noting that Apple as a brand is #2 on a list of the top 5 most talked about brands on social media come this past Thanksgiving Day.
We should also point out that Apple almost forces you to purchase something because, for instance, the MacBook Pro, you can't plug in the Lightning ear pods or whatever you call them from your iPhone on this device. You have to go to the old-fashioned round plug there, which I think they're actually eliminating in future models. So you're almost forced to buy up with Apple. So it's kind of the love-hate with Apple, but we'll let Tim Cook off the hook right now. You're also watching Under Armour. Why? Does that have to do with what Raymond James recently did? Actually, Heidi, I'm sorry. I'm going to do this with Dan. Heidi, all the best to you. See you in a bit. Raymond James graded the athletic brand to a buy. They called it an underrated underdog. The firm also sees a sustainable growth cycle for the company. Dan Roberts, save me.
All right, Under Armour. Yeah, it is an extremely bullish note. This came out Wednesday. If you look at Raymond James's take, it is go, 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 Under Armour comeback in 2020.
I mean, investors need to be worried about a very serious restatement of earnings going back how many years?
Going back to 2016, actually. But it's funny, Raymond James kind of dismisses the accounting problems, and I think that part of the note is actually pretty fair. The idea that there's going to be very minimal impact, if anything, from that probe, which is crazy considering the sort of hubbub and furor that was made when the Wall Street Journal story first came out, saying, well, wait a minute, they've been fudging the numbers for years. Now, that probe actually dates back to 2017. It's only that we were just finding out about it. The probe isn't new. And what Raymond James says in this note is, more executives have come out since that Wall Street Journal story and said, basically, we're fine with what we were doing, it's okay. And it looks like even though it was a fudging, nothing illegal happened. What Under Armour was doing was pressuring retailers to put some extra stuff out on the shelves early to try to boost the revenue numbers. And
they were pulling sales forward, essentially.
Yeah, exactly right. And I liken it to when cops give out a bunch of speeding tickets at the end of the month because they need to meet their quota. Wow. That's what was happening. Okay. But Raymond James says, don't worry about that, and also highlights one other big thing in the note that I find a little more suspect, and that is, ahead of schedule with new merchandise at wholesalers that is going to help them, and that's why they are saying that they're going to increase their marketing.
Okay, great. Who's buying Under Armour? I mean, you're competing against Nike.
Well, in North America, not enough people. I mean, sales have declined 5 quarters in a row on the home turf. No, Under Armour still has not figured out footwear. So, look, I understand the bullishness in saying that now it has taken so much damage that it's an underdog again. That part of it is true, and let's remember that Under Armour for a long time, the reason it was kind of on a hot streak was that it had this Under Armour feel, underdog feel. But now, it's sort of like it has the underdog feel for the wrong reasons, and that's because it quite literally is an underdog because it's struggling. 5 quarters in a row of sales declines in America, the home market. Right. But let's also mention, a silver lining here is that Under Armour has been doing great internationally, especially in China, ironically. Which is funny with the ongoing trade war. There's so many American brands that have been doing very, very well in China. So that narrative of, because of the trade war, Chinese consumers are going to stop buying from American brands, I don't think so. Hasn't happened yet.
This is a reference for people who are 40 or over. I'm not sure China's going to be the Polly Purebred for Underdog. The old Underdog cartoon Polly Purebred was his Underdog's girlfriend. Okay, you're not 40 yet. The next ticker of the day is UPS. The company is expecting to deliver an average 32 million packages and documents a day this holiday season. Jared Blickery is back with us. And Jared, okay, put it in perspective. How does that compare to last year or previous years?
The expectation, it's about 4% more, and you want to see these figures going up year after year, which they generally do. People buy more stuff. We have more people in the country serving more customers. UPS here up just nominally today. If we look at what it's done quarter to date, just kind of break even here. And we can also compare it to FedEx. That's an interesting comparison because UPS is more domestically oriented. FedEx has more international exposure, and FedEx has been under pressure until recently. Transports have done pretty well this quarter, so that would be October and November. We can see FedEx up nearly 11% and UPS roughly flat here. But if we go back 1 year, we can see a slightly different picture. UPS is actually up 6% and FedEx is down 30%. What happened? What's the difference? Well, when we had the resurgence of the trade war in May, UPS was eventually able to recover and FedEx just kind of went flat to down. So that period in there, when you got FedEx on their earnings call, for instance, they were citing international headwinds, not so much the domestic ones. That's really the difference between these two companies. But for the current quarter, again, if we look at October and November performance here, we can see FedEx outperforming up 11%.
Jared, meanwhile, UPS says it's going to expand its private home delivery perhaps by 2021. We actually spoke with the vice president of UPS's technology group earlier this week. And, well, here you go.
We are in the beginning of a journey, right? So there's three things that need to come together to make this a reality. The first one is technology, a safe and sustainable technology that can be deployed. Number two is the regulatory environment that puts some guide rails around it. And last but not least, you need the customer needs. So we need to put all these together to get to a future where this can happen over time.
So Jared, that was Bala Ganesh from UPS. He's in charge of Flight Forward and also the vice president of their advanced technology group. It's the FAA that has to still come up, what he's essentially saying, with a unified code of regulation across the country before not only UPS, but also, you know, Alphabet has its wing delivery. There are different drone delivery programs that really can't do what we all think is coming until the FAA gets its act in gear. Is it a likely timeline that 2021 we're going to see them do that?
That's what they say so far. Now, I don't think we're going to see drones in New York City delivering Amazon products in 2021 or 2022. That's a different scope. But they are experimenting in the Raleigh area on a hospital campus. They're going to expand that to Utah at another hospital campus, basically ferrying drug samples, body, whatever test samples there are, and also important information. It's a really interesting bid for this space right here. Now, UPS was the first to be given a license, and as you said, they are working with the DOT and the FAA on this, and they're kind of pioneers, and they're giving their data to them. So nobody knows exactly what these rules are going to look like. But if you think the congestion in New York City is bad now with the delivery trucks and bikes, just imagine what it's going to be like in maybe 5 years with thousands of drones buzzing in the sky.
Oh, joy of joys. Jared, thank you very much. Coming up, the top retail brands offering the biggest discounts as the holiday shopping season kicks off. You don't want to miss this. Don't go away. American shoppers are expected to spend $7.5 billion this Black Friday, according to Adobe Analytics. That's nearly 21% more than we spent last year. So joining us to talk about how you can score the best deals is consumer and money-saving expert Andrea Warrock. And Andrea, so what are the retailers doing different today that they didn't do last year or even in years past?
What we're seeing more and more is that retailers are getting so competitive, and in the past, they haven't been offering ad matching on Black Friday or Cyber Monday, but there are retailers that are doing that now because they want to get your dollars. They want you to shop with them. So for instance, eBay is offering a best price guarantee that they will price match any products that you find better or a lower price at another retailer at 110%. And there's no blackout day on Black Friday or Cyber Monday. We're also seeing retailers trying to get you back into the store, back to the website multiple times in a day to hopefully get you to shop more. So eBay, again, they're launching these hourly deals throughout Black Friday, releasing new sales throughout the day on different products. So there are going to be retailers that are also offering in-store only deals that may pop up throughout the day at different times as well. You can find those details on the retailer's Black Friday ad, though. This way you can track when those deals come up so you know when to shop.
All right, so let's talk about some of the things people may want to avoid. And I got to tell you, anybody who gives a vacuum to somebody for Christmas or as a holiday gift, bad, bad, bad. Not, well, sorry, Hoover, but come on. Who wants a vacuum for Christmas?
Well, Black Friday, you know what? You want to think beyond just gifts. There are some great deals to be had on products that you may need for your own home. Some of the items that I tell people to shop for are small kitchen gadgets. So for instance, there's a great deal on the Instapot Duo 6-quart, that pressure cooker, which is such a hot holiday item. You can get it for $49 at Walmart. It's originally $99. What's really great is you can even maximize your savings by using a retail rewards card that's giving you something back, and there are going to be some retailers that are doing even more of that on Black Friday. For instance, the new Capital One Walmart Rewards MasterCard gives you 5% back on purchases made at walmart.com and through the mobile app, and then 2% back for purchases in store. But for the first 12 months, they'll actually give you 5% back on those in-store purchases if you link the card through Walmart Pay app. Anyway, that's just a way to maximize those deals. Some other great products, electronics and TVs. For instance, you can get the Xbox One S Star Wars Jedi Fallen Order bundle for just $199 at eBay. They are also offering 45% off an LG 4K Ultra HD TV, large screen TVs, really good deals there. I also found good deals on beauty gadgets. So Foreo is this Swedish beauty tech company that has really great cleansing devices. The Luna 2 Mini, which is an enhanced T-Sonic facial cleansing device, is 35% off select colors and then 25% off.
You had me at T-Sonic.
There you go.
I got to go ahead.
Yep. And then I was just going to mention another deal, 40% off their UFO, their smart mask devices, which just optimize your facial cleansing. So, think beyond just clothing. There's some great deals out there.
Can I ask you this, and I'm going to challenge anybody who doesn't know it. You just said UFO. Please Google the UFO theme song from the British import from the 1960s. It is hysterical. There was a TV show. Why should you wait to the last 2 weeks of December to buy toys? Because I imagine there are a bunch of parents out there right now who are buying the G.I. Joe with the Kung Fu grip. Why should they wait?
We see typically prices on toys drop the last 2 weeks of December, but if there's a hot toy that your kid is dying for, chances are that will sell out. So that's the exception that you might want to pick it up this weekend if you find it on sale. There are a few other things to wait for. If you didn't find the big screen TV you wanted, you will find sales during Super Bowl sale season. Bedding and towels are typically cheaper in January during those white sale events as well.
All right. Andrea Warrock, thank you for putting up with my stale sense of humor. A happy holiday to you.
Yeah, and I was just going to also mention, it's so hard to know when the best time to buy is. Honey is a browser tool you can load to your browser, and they have something called price histories where you
don't work for PayPal, do you?
Yeah, and exactly. And you can review the pricing history to tell you if now is a good time to buy or not. So I would definitely recommend that tool as well. This will just make you feel like a better shopper.
Terrific. Thank you very much. Coming up, how Tesla's Cybertruck is creating its own cottage industry of trolling from big brands. We're going to show you next. It is our last tick of the day. Tesla is being trolled by other brands on Twitter. Now, this was after last week's Cybertruck demo fail, and it resulted in, as we know, those 2 shattered windows and perhaps a few shattered egos. Lego revealed its own Cybertruck with the caption, "Guaranteed shatterproof until you step on one in the middle of the night." And Pepsi showed off the caption, "Demo Day," with a ball of paper hitting a Pepsi can. That actually gets an A for effort. Yahoo Finance's Heidi Chung, along with Jared Blickery and Dan Roberts, are back here to weigh in on all of this. Heidi, okay, are they smart PR moves to get involved with the Cybertruck and its trending stuff? I'm going to kick it off with you.
Adam, honestly, these days brands are all about trying to get in on the hype, whether that's on social media and whatever method it may be. I mean, the Cybertruck has definitely been sparking a lot of conversation, whether it's good or bad. So the fact that these companies are coming out and trolling them is actually no surprise to me at all. But yeah, it just seems like they want to get in on the conversation. They want people to see that they're also down to make fun of Elon Musk and the truck, if that may be the case. So, you know, not a surprise that they're doing this. We might even see more companies come out and do this in the future.
Yeah, Adam, I actually liked both of these tweets you showed. I think the Pepsi one is better. And it's easy pickings because that demo was so funny with, you know, watch this, and then it broke. And especially in the video, you can hear what Elon Musk initially said in the moment when the first window took a hit. But then he said, well, at least it didn't go through. And they did it a second time and it happened again. But let me just say one thing here that I always remind people when you see brand tweets like this. What looks like a quick, spontaneous, clever joke or troll actually probably had like 6 marketing people sitting around a table talking about for an hour.
Jared, what do you think? I think we all love laughing.
Oh, we do. This is very polarizing, but hey, there are a lot of people who want this truck willing to put a cool $100 up for it, 250,000 of those guys. And hey, the stock has doubled over the last 4 or 5 months, so maybe he's doing something right.
Maybe. Okay, all 4 of you, or all 3 of you. I'm the 4th, but when you take me on Fat Cam, it looks like there's a 5th. Let's go beyond the ticker. Coffee prices are jumping more than 25% in recent weeks due to shrinking production in Latin America. Arabica coffee futures climbing to $1.17 a pound on the Intercontinental Exchange, surging from a recent low of 93 cents mid-October. Heidi, what's going on here? Because coffee prices really did collapse over the past couple of months. So what? They're just not planting? They're just not harvesting? What is it?
Well, honestly, we've had warmer than expected weather and less rain in this region in Latin America, specifically Honduras, Brazil, and Peru, where a lot of these Arabica beans are being produced. Now, Adam, this is concerning, especially given that global demand for coffee is on the rise, both Asia and the Pacific region. And as we know, here in the U.S., we haven't slowed down any coffee consumption as well. So this could be bad news if it is a prolonged drought, especially for consumers. They could see their coffee prices rise.
Dan?
Well, look, it is important to remember how much the season, as Heidi said, the rainfall, the climate in these places affects the global price. And yeah, coffee is only going to shoot through the roof. It's interesting. I think people forget when they talk about kind of the basic Arabica, just how much across all the different brands, that is the type of bean that everyone uses. Yes, you can roast it differently. You can call it whatever hip thing you want. But Arabica is like the backbone of the coffee market in terms of type of bean. So we'll see if the price keeps ticking up. But yeah, farming. I mean, you see a real great example of supply chain.
Jared, do you get final word on this? We're going to pay more?
Well, I think we already are. It doesn't take long for those higher prices to work into the supply chain here. The fact is, in April and May, coffee prices were at a 10-year, 11-year low, and so farmers simply didn't plant as many. You can say anything you want about the current harvesting season, but the fact is you didn't have as many in the ground to begin with. So yeah, coffee prices are probably going to go even higher from here.
You know, the great thing about being older is remembering the discussions of peak coffee. And it wasn't peak coffee, but they, 10 years ago, we're going to run out of coffee beans. We're going to be paying $5 for a cup of coffee. And of course, the market takes care of all of that. To all 3 of you, thank you. We're going to be looking at what's coming up in the next hour, at least hour 2 of the ticker as we kick off. There are new details on the backlash from China after President Trump signed legislation backing Hong Kong's pro-democracy movement. We will be back in 2 minutes with a fresh cup of coffee.
I'm the 3rd ticker.
Welcome to the Ticker on Yahoo Finance. I'm Adam Shapiro. It's a shortened holiday trading session for U.S. markets today. Both the New York Stock Exchange and the NASDAQ will close at 1 p.m. Eastern time. So let's check market action right now. We're watching the Dow. It's a bit of a sell-off, 63 points, not huge there. S&P 500 is barely down 0.25%. NASDAQ is also off slightly. But first, Hong Kong. Protests are weighing on the discussions between the U.S. and Chinese trade negotiators. Thousands of demonstrators staged a celebratory rally after President Trump signed legislation aimed at supporting human rights in Hong Kong. China's vice foreign minister called that act a, quote, serious interference in China's internal affairs. He's also urging the U.S. not to implement the legislation in order to prevent any further damage of the relationship between the two countries. Joining us now is William Lee. He is chief economist at the Milken Institute. You also spent many years at the IMF, and we're going to talk about how this might give you a better perspective than the rest of us here. But you also opened the IMF office in Hong Kong. So the fact that the Chinese are not retaliating to the fact that President Trump signed that legislation says what to us?
It says how important trade is to China, because China regards Hong Kong as a domestic political dispute over sovereignty. It's kind of tantamount to D.C. wanting states' rights, right? And the U.S. or China coming in to say something about whether or not D.C. representatives should have a right to vote in Congress. And so they're saying that we should stay out of that. And meanwhile, the U.S. legislation says it's really a human rights issue. And this is where the tension is, where the U.S. view is that the domestic political protest in Hong Kong really threatens to become a global phenomenon that threatens the ability of U.S. to do business there, because it puts into question whether China can actually adhere to long-term contracts like the one it signed in 1997 when it took over the Hong Kong from the British and promised that for 50 years they would have one country, two systems. And let me tell you, since the time I've been in Hong Kong as the res rep for the IMF, the tensions have just grown because the Chinese there in Hong Kong are saying we cannot trust the mainlanders, Beijing, to honor their promises. And that is what the U.S. investors are questioning also. If we enter into a trade agreement with them, can we really believe they'll enforce the terms as we agreed upon?
William, let me ask you this, and I ask this question based on the fact that you understand financial stability. That was one of your pioneered efforts at the IMF, global financial stability. I don't know if Hong Kong would be enough to tip the global financial markets into some kind of problem, but the trade war with the United States, we're 16 days from the tariffs potentially going up here in the United States on imported Chinese goods. What do you see happening? Help us understand where we are in the process and the negotiations.
The immediate threat from the tariffs actually is the threat to business confidence. Again, can businesses rely on Hong Kong to be a financial hub, an entry point into China, a way of doing business with China in the way that we've been used to? If we can't rely on that anymore, then businesses are not going to invest. And that's what we're seeing around the world. Globally, CEOs and CFOs are saying we should hold back on our investment plans. We should hold back on any kind of expansion, especially into China, because we don't know what the contract life will be like in the future. And that threatens financial stability, essentially because Hong Kong is a major regional financial hub, and doing business in Hong Kong means that we could use Western rules to invest in China. And that's a really big access point that's become a major calling card for Hong Kong over the years, and that is being threatened.
Okay, something we talked about earlier in the trade war with China was Huawei. So China's Huawei is preparing to fight an FCC decision to curtail its business with U.S. customers. Now, this is coming out of the Wall Street Journal. The chip maker is reportedly planning to sue the agency on the restrictions and increased spending on Washington lobbyists. So how far do you think Huawei can get with this effort to stop what we're trying to do here in the U.S.?
Well, Huawei has become a poster child for China's development strategy. That Made in China 2025 program of theirs is to become standard setters for the advanced technologies around the world. And 5G communications is Huawei's sort of a poster child for doing that sort of campaign. What we're trying to do is to say we want to compete in that world, and we're trying to restrict Huawei's ability to be able to essentially what we think is to trade in an unfair advantage and also potentially introduce national security threats, because Huawei is almost a subdivision of the Chinese Red Army. So those 2 points of national security and our desire to try to compete with China has become made Huawei into that poster child for legal actions and everything else. I think a better development strategy for the U.S. is to team up with European suppliers like Ericsson and Nokia and to develop better and cheaper systems to compete head-on-head with the Huawei systems.
William Lee, thank you very much for your perspective here on The Ticker. All the best to you.
Thanks for having me. Happy Thanksgiving.
You too. Coming up, how Warren Buffett got outmaneuvered in a takeover bid for Tech Data. You don't want to go away. And Dan Roberts, if you shoot me from the fat cam, I'll hit you. Welcome back. Let's get to our big 3 tickers. Warren Buffett's Berkshire Hathaway getting outmaneuvered by one of the world's private equity giants. Facebook is revealing details behind a widespread outage for Facebook and Instagram users. And Aurora Cannabis cutting the ribbon on a massive new flagship store in Canada. Warren Buffett got outbid. CNBC reports private equity group Apollo Global Management trumped Berkshire Hathaway's offer to purchase Tech Data. Jared Blickery is with us at the Wi-Fi Interactive board, and we're talking outbid by at least $5 a share. What happened?
Well, let's pull up a candlestick chart and we can see what happened in the price action. So here is that first bid for $130. That was by Apollo. That was back in mid-October. Warren Buffett apparently learned about the Go Shop provision, which allows other bids to come in a couple weeks ago. So he got in Todd Combs, one of his investment managers, and Greg Abel, the vice chairman of Berkshire. Greg Abel actually went down there, did some due diligence on the deal, and Warren Buffett came back with $140 per share. That was a mystery bidder at the time. Well, we just learned today that it was in fact Warren Buffett, but he's been bested by another offer from Apollo. They've come back with $145, and that's where we get this price right here. Now, this is a company that's worth about just over $5 billion at this market cap, and we'll have to see if Warren Buffett wants to counter offer because the Go Shop provision lasts into next week. But you know, historically, Warren Buffett doesn't like to overpay. We could compare this to some of his other deals historically. He usually gets a very nice premium for them.
All right, let's talk about what happened with Facebook, because the social media giant is restoring service to users after Facebook Messenger and Instagram experienced outages. The company blamed the problem on its software system. Dan Roberts is with me right now to talk more about what happened on Thanksgiving. This is in the rearview mirror at this point.
Yeah, it is, although it's not a great look when it happens on Thanksgiving. I mean, the time when everyone is trying to say, look at my beautiful family, happy Thanksgiving, and everyone's showing off their content. Facebook, Instagram, and Facebook Messenger. It's also a reminder of all the different things that are in the Facebook suite of apps. And sometimes you read about outages, you say, oh, there was an outage. But in this case, for me, just anecdotally, I was part of it. I mean, I remember going to look at Instagram during a lull in the conversation at Family Thanksgiving, and nothing was working. And I thought, is it down? And I searched Twitter. which is always ironic to see, is Instagram down? And it was. So
let me ask you this question. You don't use Facebook, but you use Instagram. It's the same thing. Why?
Well, it's not the same thing, but I'm with you in the sense that there's some irony to people saying, oh, I'm so angry with Facebook. Facebook hasn't gotten a handle on misinformation. Facebook, whatever your complaint is, mine isn't about the fake news issues and the scandals. It's just that I think it's a poor user experience these days. It's crowded, it's cluttered with ads, it's noisy. So you're right, there's some funny irony to say, I'm over Facebook. Instead, I'll go to Instagram, which Facebook Inc. also owns. Now, that said, I don't think they're the same. Instagram, for now, until they ruin it with more ads, is a much better experience. It's purely visual. You scroll. We've heard that ads do better on Instagram because they're little video ads and they sort of catch your attention and people can shop right through. You know, Instagram rolled out shopping so that you can buy stuff without leaving the app. So I don't think they're exactly the same, but your point is well taken. They're owned by the same company, and boy, having both go down on Thanksgiving, not great.
You know, in the old days, you just pick up the phone and call somebody. You wouldn't freak out over a picture not getting
call?
A phone, yeah, on a dial phone, no less. Twitter is rethinking its plan to delete inactive accounts. Do you want to weigh in on this one?
I do. This is a very interesting story because Twitter announced, I think sometime last week, okay, we're going to go through and just remove hundreds or maybe even thousands of inactive accounts, and that was going to have a few benefits. You'll get rid of some, poor content that's out there, just some dormant stuff. You'll also free up some usernames, some handles that are inactive. So some people were happy about that. Like, let's say I always wanted the handle, at DBR, which is my initials. That's just an example. There is a handle I wanted once upon a time. I forget if it was that or at Danny, whatever it was. Someone else has that, but they haven't even tweeted in 2 years, and they haven't tweeted very much, and they have no followers. To me, that's sort of like, well, I want to get that handle, and they obviously aren't using it. So that was supposed to be one of the benefits of Twitter doing this. Then, of course, the inevitable backlash. And the backlash was, well, what about people who have passed away? And who, their Twitter account is still there, and their loved ones enjoy being able to go and see all their old tweets. And Twitter came out and said, you're right. Twitter was very straightforward, didn't try to make an excuse, said, you're right, we hadn't thought of that, we're going to have to rethink this and do something else. Now they're saying they're going to come up with a new feature to memorialize the Twitter feeds of people who have passed away. But it was a little bit interesting to me. It was like, you forgot about all the dead people.
What's the B stand for? Do you say is Boris? Daniel Boris?
What B?
DBR.
You can't guess? What would be the most obvious generic?
Bruce, Bob.
Daniel Benjamin. Thank you, Adam.
Daniel Benjamin. Thank you very much, DBR. Our next ticker of the day is Aurora Cannabis. The marijuana company is opening its flagship retail store at the West Edmonton Mall in Canada. That's the largest mall in North America. The 11,000 square foot space will host cannabis researchers, chefs, and experts, as well as customers. Heidi Chung is with us. And so, Heidi, what does it say about where Aurora is going in the future of the industry? Because we've been watching the last couple of months, kind of some real big headwinds for everybody.
It's been a really, really tough couple of months, and I would say even the past year has just been really difficult for cannabis stocks, including Aurora. So this is actually a really interesting bet, Adam, because they're planning to open up a retail space that they will have events and programming at in the West Edmonton Mall in Canada. Now, like you mentioned, that is the largest mall in North America, and I know a lot of people here in the U.S. say the mall is dead, no one is going to the mall anymore, but that is not the case in Canada, Adam. A lot of folks still go to the mall. So the traffic there has actually not seen a meaningful decline like we have seen here in the U.S. Now, this is kind of a bet from Aurora here that they are looking to diversify their business. So instead of just being a cannabis producer, they plan to tap into other parts to make this store that they're opening up an experience for customers that are visiting the mall and just want to kind of pop in and see what's going on with Aurora Cannabis. We can't really talk about Aurora Cannabis, though, without mentioning that back in March, activist investor Nelson Peltz was actually announced as a strategic advisor to the company. And, that had a lot of people sort of raising their eyebrows because Nelson Peltz is kind of a veteran in the consumer packaged goods space. He has been involved in a lot of companies in that space. And so a lot of people were saying, well, maybe this seems like Aurora is trying to diversify by maybe entering the edibles and the drinks market. There are a lot of different ways that cannabis companies can look to spread their wings and not just rely on the traditional marijuana flowers here. I just also want to mention that In November, a couple of weeks ago, actually this month, Aurora announced their most recent quarterly results, and it was not a good picture. And that has just been the theme with a lot of other cannabis companies as well. They're not really seeing a big, meaningful increase in sales in recreational adult use marijuana. Just this past year, we can see that Aurora stock is down 49%. We have Tilray down 71%, Canopy Growth down 30%, and Cronos down 34%. So this big bet in a retail space in the largest mall in Canada, if it proves to be successful, could be one meaningful way to gain more revenue for a lot of these cannabis companies.
Heidi, thank you. Coming up, a new report on the hottest brands for young adults as the holiday shopping season kicks off. Do not go anywhere. Welcome back to The Ticker. Let's go to Inez Ferre on the floor of the New York Stock Exchange. She's watching shares of Luckin. Inez, what's happening there?
Yeah, Luckin Coffee is under pressure. You'll see it's trading above $29 a share. Well, Morgan Stanley came out with a note lifting its price target on Luckin Coffee to $27 a share from $21, with the analyst keeping her equal weight rating and citing strong growth momentum for the company, and also saying that app downloads last month hit a record high thanks to promotions with the company. And speaking of record highs, Peloton hit a record high today, trading above $35 a share. Baird increased its price target on Peloton to $35 a share from $29. Now, Baird had initiated coverage in early October of Peloton with a buy rating when the stock was trading then around $22 a share, citing their engagement measures. And then we're also watching VF Corp just moving fractionally. This is after a Reuters report says that the parent company of Vans is one of the bidders for Golden Goose. That's the Italian brand luxury footwear. They sell sneakers for about $400 a pair, and Golden Goose is accepting bids until mid-December. Adam.
Inez, thank you. Straight ahead, we've got a new report on the brands young adults are flocking to this holiday shopping season, so stay tuned. It turns out Black Friday and Cyber Monday are winning over certain demographics, Gen Z and millennials. According to a report from Pitney Bowes, 37% of Gen Z and 28% of millennials will get all of their holiday shopping done. You ready for this? By Monday night. Joining us is Lila Snyder. She's the EVP, the Executive Vice President and President of Commerce Services at Pitney Bowes. And you know, Black Friday, we're not even 24 hours into it just yet. Were you surprised by the results about millennials and Gen Z, or is that the same as when those of us who are older were their age?
A little bit surprised. It seems to be getting earlier. They're either more organized or they're more excited about the deals they get on the weekend, but they're certainly shopping earlier. Some of them were even done before this weekend, which is remarkable, but a really high number of them will be out this weekend shopping.
How big a threat, because this is the generation, the millennials and the Gen Zs, that are more about the experience, you know, the travel vacation or those kinds of things. So how much of a threat is that to retail, whether it be online or brick and mortar?
Well, they're certainly shopping online more, that's for sure. And I think across all demographics, they're looking for more experiences. We see that. I think there's some reports about roughly a third of spending will be more on experiences than goods. But the number of people shopping for goods is still incredibly high, and we expect to continue to see that through this holiday weekend.
Now, here's something that stuck out. Your survey found that 6 in 10 U.S. shoppers were dissatisfied with their holiday shopping experience last year. And that was actually double what it was just 4 years ago. What are the retailers doing wrong that people would be dissatisfied, or is there something else at play?
Well, part of it is just frequency. So the more people that are shopping online and the more often they're shopping online, the more likely they are to have an experience that disappoints them. So part of it is just frequency. And what they're really disappointed about is late delivery, something getting to them later than they expected or that they were promised, inaccurate tracking, so not being able to see where that package is along its journey, or the shipping cost is too high. So free shipping is the most important to online shoppers all the time, not just during the holidays, and they get really frustrated if you're not offering that, particularly this time of year.
And then there was another statistic that a large number of people liken their post-shopping experience to root canal. I hope none of us in this studio ever know what that truly means, but that's not a good thing that you found.
Yeah, we wanted to give consumers an opportunity to compare the experience to some good things and some less good things. And we were really surprised that over 80% of consumers picked something about the shopping experience and compared it to a root canal, whether that was a late delivery, an inaccurate item, or really often it was the returns process. So we're all shopping this weekend. Starting next weekend, we'll all start returning.
What about from the perspective of those who sell us these products, from the retailers? What are they complaining about, or what are they celebrating?
Well, for retailers this time of year, it's really about just getting those orders filled and getting them out the door and partnering with their carrier partners who take those from the retailer to your doorstep and making sure that they are not falling short of those expectations that consumers have that continue to rise.
And what about free shipping? Is it really free, or don't they just include that in the price that we're making? Because they can't keep squeezing margins, can they?
All retailers do it differently. Many do include it in the price, but from a perception perspective, what a consumer wants to see is that shipping is free. They don't want to feel like they're paying extra for it. So as long as you're competitive enough on the price of the good and the shipping is still free, consumers will accept that.
Okay, now Dan Roberts is listening because he's from that millennial Gen Z cohort. Why are they shopping less and perhaps getting all of it done in one moment?
It could be that they just believe the deals are better, right? They aren't waiting as long to see how those deals materialize and get closer. They just want to be done with it and move on. We're not sure why, but we know we see it pretty consistently and significantly early in the season.
And so are we going to see, we're having a discussion, I've grown up, I've been in the news business, almost 30 years. It's always Black Friday. Are we going to stop having this discussion about Black Friday, since it seems as if what you've just said, this is all going to take place well before this date?
We've been seeing this phenomenon over the last few years. We call it the stretching of the holiday season. We're seeing more shoppers start earlier and try to finish a little bit earlier. You still have those procrastinators at the last minute, of course. But even this year, especially this year with a shorter shopping season, just 26 days between Black Friday and Christmas Eve, we saw people starting earlier, and we continue to see that.
But even the whole discussion about Cyber Monday, I mean, the fact that Amazon had Prime Day, less than 2 months ago?
Yeah, it's strange. It's still the largest online shopping day during the holiday period.
Cyber Monday?
Cyber Monday continues to be.
All right, well, we're looking at a $730 billion transactional holiday. It's going to be November and December, and we are off to the races. Lila, thank you very much. Lila Snyder joining us from Pitney Bowes.
Thank you.
Coming up, how small businesses are planning to outcompete their big business rivals on Small Business Saturday. That's tomorrow. The top executive from American Express will join us with details about that next. Welcome back to The Ticker. I'm Adam Shapiro. Let's give you a recap, a quick one, of the tickers that we've covered in the show today. First up, Berkshire Hathaway. It lost in a bidding war for the Florida-based company Tech Data. Private equity giant Apollo Global Management, they're scooping up Tech Data for $145 a share. That beats the offer from Berkshire, $140 a share. Second was Facebook. The company is coming out with an explanation for an extensive user outage on Facebook and Instagram during Thanksgiving Day. They blame the problem on one of their central software systems. Our third ticker, Aurora Cannabis. That Canadian pot company officially opened its flagship retail store. The 11,000 square foot location in West Edmonton, Canada, will offer buyers more than 40 different types of cannabis products. We're checking the price of oil ahead of the OPEC Plus meeting in Vienna next week. Crude actually sinking as Russia reportedly aims to delay OPEC cut extensions. And you can see there that crude is now at $55.86 a barrel. Meanwhile, Chevron is gearing up to sell its stake in 2 Nigerian offshore blocks, according to Reuters. Now, this move comes as the energy giant shifts its focus on U.S. production. Chevron is up about 8% year to date. This holiday weekend and all year round, American Express is urging consumers to shop small, most notably tomorrow for the 10th annual Small Business Saturday. For every dollar spent at a small business across the country, 67 cents will stay in a local community. Joining us now is Andy Goldberg, SVP Global Brand Planning and Content at American Express, and it's good to have you here, Andy. So we talk about small business. Why did American Express decide 10 years ago to get into this?
Yeah, I think 10 years ago, coming out of the recession, you saw small businesses and small merchants really struggling to get back on their feet. And American Express stepped in and really started to grow this into an annual holiday and turn it into an opportunity around Black Friday and Cyber Monday to drive attention and consumers to their small businesses and their local communities and cities to drive that 67 cents number for every dollar spent, helping support them and helping them thrive.
And I'm looking at the webpage right now. If you go online, you can see Small Business Saturday.
Yeah, shopsmall.com.
Right. But let me ask you this. What specifically, how do you work with a small business? How does American Express assist these men and women? Because small business also employs a great number of people nationwide.
Absolutely. And if you think about it, the way American Express works with them is multiple ways. One, we issue their cards, business either for small business opportunities, or they take American Express when people come in and buy their product, and we help support them and help them, give them tools to really grow their business and an opportunity to promote their business to their local communities. So they get to go on shopsmall.com and click onto a merchant link and download tools that will help promote what's going on in their business.
Because a lot of attention is, on the big retailers today, and then the cyber retailers and going to the mall. But this is about going to Main Street.
Yeah, it is.
And is Main Street dead, though? Some people would say it is. Others would say no, it's not.
No, I don't think it is. Main Street is a broad term, right? There's Main Streets in every little town in America, but then there's opportunity with with small businesses in New York City alone, or LA, or Portland, and there's a lot of opportunity around the country for small businesses and small merchants, for customers like us to reach out and go shop there.
And do you, is there a statistic or a number that you can share with us about the number of small businesses that partner with American Express that then, it's also about giving back to the community in which these businesses are located?
Yeah, it's not a specific number that I would give you on how many merchants, but I would tell you that if you think about the scale, whether it be a small business you're buying a gift at for the holidays, even if you're going to go out to eat and eat at a restaurant, think about the opportunity that is. That's a small merchant. So there's so many across the country. And again, I go back to the number because it's so powerful. If part of that money stays local, that's 67 cents for every dollar, that's helping that community, that's helping that city grow. There's such an opportunity to really have an impact.
Tell me about this, because it's on the website that you're sponsoring. Get customizable marketing materials for your business. Yep. Does that come from American Express, or are you linking up small business with those who would do this?
Well, we're linking up, but we're also helping. So it's both. We give opportunities for them to build custom materials through social media opportunities that basically allow them to customize for their business, and then we help them guide through them through the process.
All right. Well, it's Small Business Saturday, and the website again is
shopsmall.com. Shopsmall.com.
With it small, not mall. Small.
Yes, small.
Andy Goldberg, thank you for being here.
Thank you so much. Appreciate it.
Coming up, why Apple is poised to have the, quote, clear star product of the Black Friday shopping frenzy. So stay with us. Welcome back to The Ticker. Let's get to our next group of tickers. Apple will have the, quote, clear star of Black Friday products, according to one major research firm. Under Armour is scoring a bullish new call despite its recent woes, and UPS revealing fresh estimates on the eye-popping number of packages that it expects to deliver every day this holiday season. It's in the millions. But first to Apple. Wedbush analyst Dan Ives predicts the tech giant's new AirPods will be the clear star of Black Friday this year. Heidi Chung is back with us. And, let's talk about demand for this product. And the way it's been described to me, if you have an iPhone, you get the free buds. But for some of us, they don't fit. They hurt and they fall out. These new pods have the silicone adapter, and I tried them, and I got to tell you, I'm a thumbs up, not on the price, but what's the demand for this thing?
I will say, Adam, a lot of people are saying that they are much more comfortable and fit in the ear much better than the original ones, like you mentioned, because of the fact that there are different silicone sizes that you can use to customize to fit your ear very comfortably. Now, what Wedbush's Dan Ives is saying that the new AirPod Pros are getting rave reviews from the customers that he has spoken to, and that's driven him to say that this company's demand for the AirPods are giving him reason to give the stock an outperform rating and a $325 12-month price target, Adam. So that is a 20% move higher from the current trading levels. Now, Ives is estimating that Apple is on pace right now to sell about 65 million AirPods in 2019, and it is also on pace to potentially reach 85 to 90 million units in 2020. And he also notes that the company is on pace right now to see AirPods revenue to total about 4% of total revenue as well. So that would be a pretty meaningful number. As we know, Adam, over the past couple of quarters, Apple has been really adamant about moving away from just the iPhone and hardware into services and wearables. In the past quarter, we learned that the services and wearables segment was the fastest growing segment for Apple, with revenues jumping 54% during the past quarter. Now, this Dan Ives also mentioning that because the AirPod Pro is seeing really high demand, that could push retailers to push discounts for the regular AirPods, and thus the sales for that item will also skyrocket as well. As we know, this Black Friday and Cyber Monday and holiday shopping season right now is gearing up to be a record-breaking one, so we will definitely have to see how these AirPods tend to perform. But at the end of Dan Ives' note, he also talks about 5G, and Adam, a lot of analysts on the street right now are extremely bullish on the prospects of Apple jumping into the 5G race. A lot of people are estimating at the earliest Apple could release a 5G compatible phone at the end of September. Now, Apple has not confirmed whether or not that will happen, but a lot of that positivity and that optimism has sort of been baked into a lot of analysts' recommendations at this point. There are a lot of bulls on the street when it comes to Apple stock right now. We have 27 buys, about 14 holds, and 7 sells.
And when you talk about Apple stock, it wasn't too long ago we made a big deal out of the fact that they had a market cap of $1 trillion. Today it's $1.2 trillion. Ho-hum. Nobody seems to really lose sleep on that. Heidi, thank you. We're also watching Under Armour. Raymond James recently upgraded the athletic brand to a buy rating, calling it an underrated underdog. The firm also sees a sustainable growth cycle for the company. Dan Roberts is back with us. We were talking about this earlier, and one of the big surprises is China.
Yes.
Why do the Chinese want Under Armour? Is it just an American, they love things American?
Well, I think that the company is kind of growing better in China than in the U.S. because it's still a relatively new, premium-seeming proposition there. In America, it's really hard for Under Armour to come off as a premium, upscale brand when it's constantly discounting, constantly promoting. In the industry, in apparel, they call that being too promotional. There's an analyst that we talk to often for our stories and on our shows, Matt Powell of NPD Group, who will often tweet out and say, well, I'm in Foot Locker and all the Under Armour stuff is 40% off. I mean, that doesn't help the brand. And, a lot of retail companies are going through this, where they're going through the decision of, do we mark down or do we refuse to mark down because we don't want to be seen as too promotional because that hurts our brand, but then, it's going to squeeze our margins. So that is a silver lining is Under Armour's growth in China. Now, this Raymond James note you mentioned makes more of the fact that they have a new CEO starting in January, Patrick Frisk, who originally comes from Aldo, the shoe brand, where he did good things. The company has a lot to fix, and people are willing to give them some leeway and think, well, maybe this new CEO can start to fix things. There is a good chance of a comeback because also Raymond James likes that a lot of product is already at wholesalers early. Although, ironically, you could say, early, just like
just in time for
how the company was moving things up early for the sales numbers. And Raymond James also dismisses all of that over fudging the sales numbers for you.
Does the Raymond James note, do they address an issue, and if it's not an issue, let us know, generational. I'm from the generation that Under Armour could do no wrong. It was the hot athletic wear, but now it's like yesterday's news, and does a 21-year-old or 22-year-old really care?
Right, so the note doesn't get into that, but you're right to ask that question because I think that is the big problem for Under Armour. I mean, at this point, for so many years it has missed out on the athleisure trend. I think at first, stubbornly. Now, sadly, and the trend just isn't going away. I mean, in fashion, yes, trends come and go, and these things come in waves, but athleisure has lasted an extremely long time. It isn't going away yet. Adidas has done well with athleisure because of its retro sneaker designs. Under Armour has never been an athleisure thing. It has been about performance. It's clothing you wear to do sports in, to sweat in, to work out in, and that's not what's hot anymore. And so is Patrick Frisk, when he takes over, going to finally adapt to that, or is he going to still say, we're doubling down on performance?
Or is he going to prepare this for an acquisition and you use this as, is anyone talking about, is it time to sell? And does this fit into to a Nike? I don't know if it would fit into a Nike, but it's somebody's portfolio?
Well, it could fit in with a Nike, or it could fit in with a VF Corp, the owner of North Face, Reef, Timberland, Vans. That's a company that could look at Under Armour. But the rumors of Under Armour selling resurface every few years and have for like 15 years already, and it has never happened. And also, I would say, boy, you don't sell when you're struggling. You wait until you're flying high and things are going well, and then you sell at a premium. Selling now would really be like waving a white flag on
a bit of, and if you were to go that route, though, is there a private equity out there that could actually fix this, or does private equity dabble where it should not?
I mean, maybe, maybe like a Jeff Smith, but what always happens is they just come in and cut a lot of costs, cut a lot of jobs.
And then kill it.
Well, and what Under Armour needs to be doing is fixing its home turf right now. 5 quarters in a row of declining sales in North America.
Did you catch that face? Make that face again. 5 quarters. There you go. All right, Dan, thank you.
But could have a comeback.
The next ticker of the day is UPS. The company is expecting to deliver an average of 32 million packages and documents a day this holiday season. Jared Blickery is back with us. Jared, how does this compare to previous years? Because they're actually adding 400,000 more packages. Is it an hour or a day? It's a day, I think.
Yeah, I think that relates to their sorting facility, how that capacity has increased. But the 32 million at their peak per day is about 4 or 5% beyond their peak last year. And that number tends to go up just about every year that we're not in a recession. And then it compares to only 20 million per day in their non-peak period. So that's a jump of 60%. And the way they're doing that, they've hired 100,000 seasonal workers. They held a day where they wanted to get 50,000 people into their door in one day. They had over 100,000 apply, so they definitely are staffed up. And when you compare the operation to FedEx, now UPS is kind of the nuts and bolts. They do most of the ground delivery. FedEx does most of the air delivery, especially the international. It's kind of apples to oranges, but there are some apples to apples comparisons to be had. If we go to a comparison of these two companies going back 1 year, it's kind of 2 different stories here. So we can see UPS is up 6% while FedEx is down 30%. The big differentiator was what happened with the tariffs. When Trump escalated the tariff war in May of this year, FedEx slumped and they didn't really recover. They haven't had the chance to break even on that just yet, whereas UPS was able to overcome. Now, if you look at the last quarter here, FedEx has outperformed. They're up 10% versus UPS being relatively flat. We'll have to see how those 32 million packages per day parlay into earnings, and we'll get those in the new year.
I want to talk about something that's coming down the pike, not only for UPS, but for lots of shippers and delivery services. We spoke with Bala Ganesh, who is the head of, at least vice president of UPS's technology group. We spoke to him earlier this week about drone delivery. Here's what he told us.
We are in the beginning of a journey, right? So there's 3 things that need to come together to make this reality. The first one is technology, a safe and sustainable technology that can be deployed. Number 2 is the regulatory environment that puts some guide rails around it. And last but not least, you need the customer needs. So we need to put all these together to get to a future where this can happen over time.
So we're watching drone delivery, but then there's this kind of story, Jared. Authorities say UPS workers ran a drug trafficking ring for a decade. PR black eye, or is this, an isolated situation and UPS, yeah, they broke the law, they're going to suffer for it?
Yeah, you don't hear about this every day, or at least I haven't, but the Tucson authorities were on to this particular smuggling operation back in 2009, and this has caught the attention of the federal authorities as well, and apparently they've been taking their time, documenting the evidence, and now they finally built their case, and now this is public knowledge. Again, I don't see this every day, but it does speak as to the tremendous capacity that one person can have to counterfeit or to smuggle drugs in. And this is counterfeit vaping equipment, cocaine, marijuana. You can just imagine what they might have been able to get away with over the years.
The winner on that front, though, is still the Colombian cartel. That they built a homemade submarine and shipped 6,000 pounds of cocaine across the Atlantic. First transatlantic submarine shipment apparently to be seized. The Spanish police got that earlier this week. But a homemade submarine, how do you top that? Jared, thank you. Straight ahead, climate change fueling a major protest against today's Black Friday shopping frenzy. We got the details for you next. This year's Black Friday sales are expected to break records, but not all Americans are getting ready to hit the mall or go shopping. The annual Buy Nothing Day protest kicked off around the globe today. Demonstrators are fighting consumerism. Kristen Myers joins us now with the details, and help us understand the pushback.
Yeah, okay. So obviously, as you mentioned, everyone is hitting the stores today, or probably most likely opening up their laptops, going on their phone to buy new stuff. But essentially, this is a protest, Buy Nothing Day. It actually originated from 1992. I had no idea that this movement had been going on this long. And it originally started out as this anti-consumerism movement. Essentially, we're all, slaves to the things that we own. And really, to break yourself from that, you should just essentially not go shopping today. However, climate activists have really latched onto this whole movement. As you can imagine, obviously consumer spending, a huge part of our economy. So you can only imagine how much shopping and creating products to sell to people also contributes to climate change in the environment. So now you have climate change activists are saying, look, Black Friday is a huge contributor to pollution, to climate change.
Do they? I realize. Forgive me for putting.
Yeah, no, of course.
Do they explain how Black Friday alone could do that? Because it would seem to me, if everyone does it in one day, as opposed to dragging it out over the year, you're actually controlling the carbon emissions and all of that from all the cars that go to the mall.
Right. So this is the big day because it's the biggest shopping day of the holiday season, and it has been for the last 3 years. So what it is it's more people than normal that would be hitting the roads to go to those stores to wait in line, to get their big screen TVs. But it's also even just shopping at home online. Amazon, for example, according to Salesforce, that's like the #1 online retailer, of course, as we know that people are going to be using. By their own admission, I want to get this number right because I have it right up in front of me. Amazon says just last year that their total carbon footprint equaled 44.4 million metric tons of CO2e. That's a carbon dioxide equivalent. We don't need to get too far into the weeds, but just in Los Angeles alone, 642 million in uncompensated public costs as a result of their impact
Of
to
climate
the environment. Yes, to the environment. Yeah.
Okay. Yeah, I'm listening.
So
I'm not discrediting this.
So it's this huge problem that we have here. So essentially, activists are saying, look, you need to we have to fight back against this. So today is the day. Don't buy anything. Now, to your point, however, you can't just say I'm not going shopping on Black Friday and think that you're going to make a huge impact to
Well, it starts Ed Bigley. I'm not joking. The actor, he takes the bus in L.A. I mean, you have to start somewhere. I mean,
well, you do have to start somewhere. I think what climate protesters or what climate change activists are trying to do is essentially get everyone playing in the sandbox, so to speak, on this issue, bring it to everyone's attention, how much consumerism contributes to climate change. So today's the day. Stay home, don't buy anything, save yourself some time and some stress, and reevaluate, I guess, your shopping habits going forward and how that might impact the environment.
I hear you loud and clear. I think a lot of people, what's the famous line? Ain't nobody got time for that.
Oh, God.
Thank you very much. A New York Times poll found that Senator Elizabeth Warren's wealth tax plan has a wide range of support, with the exception of one group. Kristen, which demographic is that?
No surprise here. Republican men with college degrees are the ones that do not want this wealth tax the most. Of course, they're also the ones that would be hit by this tax essentially the most. So they're the group that like it the least. 41.5% are interested in this wealth tax, and of course that's far less than the total number of folks that support it. Over 60% of Americans across the board actually support some kind of wealth tax.
Yeah, but that's one part of her platform. The other part doesn't resonate with a lot of people, and she's actually walked back on the Medicare for All plan.
Right. So while there is, as you mentioned, kind of broader support for this wealth tax. I know.
That's what they'll just call it that.
I know, right? I'm still in my food coma from yesterday. Medicare for All, that really cleaves more along party lines. Democrats obviously being far more supportive of that platform than Republicans, and even among Democrats. And as you can hear on
the progressive Democrats love it, but centrist Democrats, no way.
Even among Democrats themselves, as everyone has seen on the debate stage, there's not clear consensus or support at all for that plan, hence all the infighting between them.
All right. I'm with you on the food coma. I'm still trying to wake up.
I know. I'm still trying to wake up from all the turkey and the ham that I had yesterday.
Turkey and you had a big feast.
I did. I really did.
For us, it's the key lime pie and the pecan pie afterwards.
Did you bring any for us today?
No, it was that good because we make it from scratch. Thank you. Coming up, I need the words. When we return, if you think the cost of your cup of coffee is going up, you're not crazy. The details on an unexpected spike in prices just ahead. Let's give you a quick recap of some of the tickers that we've covered in the show today. First up, Berkshire Hathaway and Tech Data. Berkshire has been outbid by private equity giant Apollo Global Management in a takeover bid for the company. Now, that's according to CNBC. Apollo will buy Tech Data for $145 a share. That's above the $140 a share offered by Warren Buffett's Berkshire. Second was Facebook. Many users experienced extensive outages on Facebook and Instagram during Thanksgiving Day. Facebook now says the problems were caused by issues in its central software systems. Our third ticker, Aurora Cannabis, the Canadian pot giant, is officially opening its first flagship store located at North America's largest mall in West Edmonton. The 11,000 square foot store offers buyers more than 40 different cannabis products. Something to buy. It's our last tick of the day. Tesla is being trolled by other brands on Twitter after last week's Cybertruck demo fail resulted in 2 shattered windows. Lego revealed its own Cybertruck with the caption, check this out, guaranteed shatterproof. And then, of course, there was Pepsi. Roll that video. Pepsi showed off the caption, Demo Day, with a ball of paper hitting a Pepsi can. Yahoo Finance's Heidi Chung, along with Jared Blickery and Dan Roberts, back here to weigh in on all of this. I'm going to start with Dan Roberts, who'd rather talk about The Crown on Netflix, but this PR stuff. You love this stuff, don't you?
I do, yeah, and I think that it makes sense to do this, but I always love to remind viewers, make sure that you have your cynical hat on when you see these brand tweets, because what looks like a spontaneous, cleverly dashed off joke probably took 5 marketing people sitting around a table to plan the little minutia of and make sure that we don't accidentally offend, but I do think it worked. I think it was a pair of good tweets by Pepsi and by Lego, and Tesla should be trolled for that demonstration. If you watch the video of the moment where the metal balls are thrown at the Cybertruck, make sure you listen to hear Elon Musk's verbal reaction after it happened.
Jared, you want to weigh in?
Yeah, well, I think all PR is good PR. The fact is 250,000 people have shelled out an entire $100 bill to put their name on a reservation for this truck. It's very polarizing. Some people love it, some people hate it, but he got a lot of publicity for this thing. Everybody knows what it looks like, so maybe that's just what he needed.
Heidi, is all PR good PR? I don't think Prince Andrew over across the Atlantic might agree with that statement.
I think, Adam, bottom line here, Tesla CEO Elon Musk is notorious for trolling other companies. So the fact that they had this mishap during the unveiling, it's no surprise that companies are coming after him. But to be fair, Lego's truck actually didn't even have any windows, so of course it's unbreakable at this point. But the fact that Elon Musk and Tesla have a target on their back, one, that could be a good thing and a good sign for investors. Perhaps they're saying that this whole Cybertruck thing, even though people are making fun of it, could actually be a big surprise hit. So at the end of the day, who will have the last laugh? We do not know, but for now, people are getting a lot of laughs after these trolls have come out.
Okay, let's talk about coffee. Coffee prices are jumping more than 25% in recent weeks. That's due to shrinking production in Latin America. Arabica coffee futures climbing to $1.17 a pound on the Intercontinental Exchange. That's surging from a recent low of 93 cents mid-October. Heidi, as I throw this question to you about a slower coffee harvest to blame, I just got to tell you, chock full of nuts. It comes in a can, $5.99 at Fairway. You can go to a bodega around the corner from the Fairway. You can get it for $2.99. Not really hitting me in the pocketbook, so what's going on here?
Well, Adam, you and I both are apparently not coffee snobs, but there are a ton of coffee snobs that want those really premium Arabica beans from Latin America. And right now, it seems as if the prices are surging for those Arabica beans because of what we're seeing in terms of a drought over there in that region. So specifically, we have Honduras, Brazil, as well as Peru not getting enough rain as they normally would, and that is essentially driving up the price of these beans. But we have to wait and see whether or not this is a prolonged issue. If it's just for the short term, I don't see this actually affecting the consumers here and around the world. But if it is a prolonged situation, I think consumers should start thinking about potentially purchasing those coffee cans like you mentioned from Fairway.
All right, well, Jared, let's talk about the importance of Latin America to coffee. Can't we purchase from Africa or other places?
Oh, sure we can. We can get different beans, but at the end of the day, these are commodities. And the fact is that earlier this year, we saw coffee prices at a decade low. And so farmers weren't simply putting them in the ground to grow them because they didn't think think they could break even. As a result, supply and demand have adjusted, and now we have these elevated prices. I know it's really concerning to Brian Sazi over here, but you might be chock full of nuts guy. I'm a Sanka guy. I'm fine.
Sanka. Oh my God, Tang took the astronauts to the moon. Dan Roberts, do you drink coffee?
Oh, you guys, that is not good coffee. Yeah,
No,
you got to have the better quality stuff, and that is the Arabica from Latin America. So if prices go up, for a while, people are going to be willing to pay it.
People are going to be willing to pay. You drink coffee, Dan?
Yes, the good stuff.
The good stuff.
Not chock full of nuts in a can.
Chock full of nuts is good stuff. You haven't tried it. I'll bring you some. All right, stay tuned for the last hour of trading on the final round on this shortened day of trading. We're going to send it over to them in just a second. We've got Brian Sazi standing by, and he's going to regale everybody with tales of his Thanksgiving Day shopping, what he saw and what he saw was missing from some of the big stores. Final round is next.
Happy Black Friday, everyone. I'm Brian Sazi in New York, and this is the final round. Stocks are inching lower on this shortened Black Friday trading session, but are still heading for their best month since June. We'll have more on the markets coming right up. Plus, we've got the latest stats on the biggest shopping day of the year. Who's shopping, where, and what everyone is buying right now. And Warren Buffett is looking to spend some of his $128 billion in cash, but has just lost a major bidding war, while the Oracle of Omaha walked away completely empty-handed. Plus, we graded this week that was for President Trump in your Trumpometer score, while Rick Newman says he's one lucky president. Let me introduce our panel for the next, probably a little over an hour. We got Julia Roche sitting right next to me. We got our very own Dan Roberts, host of Wi-Fi AM. Dan, good to see both of you guys here. It is the last trading session of the month, and even though we're seeing right across the board, the S&P 500 is headed for its best month since June. Most S&P 500 sectors are in the red, with the XLE seeing the biggest losses on the session. So what are y'all watching, Julia?
Y'all. Okay, well, I'm obviously watching Walmart, the world's largest retailer. And guys, I got to say, ThinkNum pointed this out. Walmart's social media mentions on Facebook are nearing 1 million. And you know why that is? Because they started Black Friday much earlier. They started on Wednesday evening. Within minutes, they were selling out of a lot of their deals online. Walmart's had a really strong year, up more than 26%. They continue to deliver strong earnings, also driven by that strong e-commerce growth. So I'm going to be really interested in how the fourth quarter plays out for them.
Dan, how about you?
Not too much to watch today with the low volume and activity, but if you're watching anything, it's got to be the retail names that we've been talking about, how key and pivotal this holiday shopping season, and it is a shortened cycle between Thanksgiving and Christmas, will be for these retailers. Of course, Julia hit Walmart. There's also Amazon to look at. There's Costco. There's Target. A lot of these names that have been doing a lot for Black Friday and for Cyber Monday coming up. Target has received a lot of accolades for its e-commerce, which, you know, the numbers, every earnings report for the last 4 or 5 quarters from Target on what percentage of sales are coming from e-commerce just get bigger and bigger. So let's see how Target does. I feel like sometimes we risk focusing too much on the names like Walmart and Amazon, whereas some of those other names that maybe you don't think of first are having bigger bumps this season.
You know, it did caught my attention. I was in those Walmart stores when they opened last night. Roku TVs. This is going to be another holiday season of big-time streaming.
Yeah, it's interesting, though. I mean, Roku has been a nice play for a while because a lot of investors like that it's a pure play. It's just the pipes. They don't have to worry about original content. They're not making stuff. Now, there is like a Roku channel when you go on Roku.
I still don't know how to use it.
And there's no Roku original programming. They're not worrying about buying their stuff back from anyone. You know, Disney and others have spent money not only to create original shows, but in some cases, just spending billions to license back their own content. Roku doesn't worry about any of that. But now, with Roku having a TV, you get into hardware beyond just the Roku device. And so I'm not sure. I mean, that means higher costs. What we're going to see. You're right. There's some nice buzz about it at first. But I'm not sure that the Roku TV in 2 years, 3 years when we look back, will 100% for sure be a big hit.
Well, we'll revisit that in Thanksgiving 2020, guys. Yep. All right, well, more for today's market action. Let's go down to the floor of the New York Stock Exchange where we have our very own Inez Ferre. Inez, what's going on? What's moving today?
Yeah, Julie, we've been looking at a lot of kids moving around this floor today as it's Kids Day here on this Black Friday. We're also checking out some stocks that have been moving. Take a look at Dollar Tree. Dollar Tree's price target at UBS was cut to 108 from 120. Also, it was cut to neutral at Atlantic Equities. Earlier this week, Dollar Tree was really, that stock was hammered after they reported their earnings, talking about tariffs and incorporating the impact of tariffs in their fourth quarter outlook. We're also looking at Luckin Coffee that's under pressure. It's trading around $30 a share. Morgan Stanley increased its price target on Luckin to $27 a share from $21, with the analyst keeping her equal weight rating on the stock, citing strong growth momentum and also saying that their app downloads last month hit an all-time high. And also speaking of all-time highs, take a look at Peloton. Peloton today has been trading at an all-time high, around $35 a share. Well, Baird increased its price target on Peloton to $35 a share from $29. Baird had initiated coverage of Peloton in early October when the stock was trading around $22 with a buy rating.
Inez Ferre, live from the floor of the New York Stock Exchange. Thank you so much.
Holiday sales data is coming in hot and heavy right now. All in all, the consumer has showed up in a big way, but mostly online. Yahoo Finance's Heidi Chung is here with the latest sales stats. Heidi, take it away.
Hey, Brian, happy Black Friday. So a lot of market research firms are out with their predictions on just how crazy, busy, and profitable this holiday season is going to be. I know we are halfway into the Black Friday shopping day, and it's projected to be a very big one. We have the National Retail Federation saying that about 114.6 million people will be shopping today alone. Now, according to Adobe Analytics, shoppers are expected to spend a total of $7.5 billion on Black Friday and $9.4 billion on Cyber Monday. Now, over the span of the entire month, so from November 1st to November 28th, Adobe is predicting that customers will spend a whopping $143.8 billion. Now that is up from the $126 billion that was spent last year. Now we have Salesforce here predicting that Black Friday is on track to be the biggest global digital shopping day of the holiday season for the third consecutive year. Salesforce projecting that online sales to reach $40 billion globally and $7.4 billion here in the U.S. today. Now, like I said, we are still halfway through Black Friday, so we are still getting very preliminary data when it comes to today. But the top 5 best-selling products of yesterday on Thanksgiving Day, rounding that list out, we have Frozen 2, LOL Surprise, Fire TV, Apple laptops, and Madden 20. So according to Salesforce, what was really big on social media yesterday? Well, according to the company, 5 most talked about brands, we have Nintendo, Apple, Samsung, Google, and Nike. Now, I don't know if any of those names are a surprise to you, but they sure are not to me. Now, how this day pans out, we will have to wait and see, but everybody is bracing for an extremely big one, even though it is a little bit shorter than the typical holiday shopping season.
Hey, Heidi, I need a new briefcase. Why don't you hook me up?
I'll keep that in mind for Christmas for you.
Appreciate that. Get out there and shop. Heidi Chung, we'll talk to you soon.
Thanks.
Well, the National Retail Federation expects more than 165 million people will shop over the 5-day Thanksgiving weekend. Joining us now to discuss trends for the holiday retail shopping season is Catherine Cullen, the NRF's Senior Director of Retail and Consumer Insights. Catherine, sounds like a lot of people are shopping. What are you expecting this year in terms of growth, and just how much are people willing to spend?
Definitely. Well, happy Black Friday. It's great to see such a positive start to the holiday weekend. Overall, NRF believes the stage is set for a very strong holiday shopping season. We're expecting retail sales to grow somewhere in the range between 3.8 and 4.2% during November and December alone, which is very positive. It's in line with our overall forecast for the year, and it's also in line with what consumers are telling us they're expecting to spend themselves on gifts and other items during this season.
Catherine, I was looking at some of the teen apparel stocks today. See Abercrombie and Fitch under pressure. Are those companies are they coming out of the season slowly so far?
We don't speak specifically to the performance of different companies. What we can say is overall for the industry, the retailers we see doing well are those that have made strong investments in their technology, in blending the digital and the physical, and have started to see that playing out right now. We do know that the Gen Z consumer is starting to come into its buying power, and we're starting to see them choose the brands and retailers that they like. However, there's still lots of runway left in the holiday season for retailers to attract these consumers, to attract the broader American consumer. So I think we're still in a wait and see mode.
Catherine, despite all the doom and gloom that we heard all year, it sure looks like a very good shopping season so far, as you said, and the consumer has remained strong. What happened to the fears of the tariffs and the ongoing U.S.-China trade war hitting the wallet of the average American shopper? Experts were rolling through here all year saying, well, soon it's going to happen, soon it's going to happen. It looks like, for now, another shopping season where we're mostly okay, but might that come soon if there's no resolution? The idea that people will start to really see and notice prices of purchases going up because of the tariffs.
Well, we certainly know it's something that is on the mind of American consumers and American businesses. More than about 8 in 10 consumers tell us that they are concerned about the impact of the trade war on prices for things that they pay. So it's definitely top of mind for consumers. We know that some of the tariffs that went into effect in September already impacted holiday categories, things like apparel, footwear, televisions, and retailers have had to adjust their strategies to account for that. However, the next set of tariffs that are set to go into effect in December, we probably won't see the full impact of that until 2020. All we can say is that right now, the consumer is feeling good about their own individual situation, their own job, their own income and paycheck. And that is translating into a willingness to spend during this holiday season, which is definitely great as we head towards the end of the year.
Catherine Cullen, National Retail Federation's Senior Director of Retail and Consumer Insights. Thank you, and happy Black Friday.
Thank you. Happy Black Friday to you, too.
Coming up, Warren Buffett finally looked ready to put some of his massive cash pile to work, but he got outbid by another suitor. What Buffett was looking to buy and why he lost it, straight ahead. But first, let's take a look at where European markets closed today. Now let's take a look at some of the stocks on the move today. Facebook shares are trading higher after the company says service has been fully restored on Facebook and Instagram after outages on both platforms affected users around the world. Tough day for holiday newsfeed stalkers. VF Corp, the stock is under a bit of pressure following a Reuters report that the apparel maker is among the bidders for Italian shoe brand Golden Goose. Private equity firms Permira and Advent are also reportedly in the running for the maker of luxury sneakers that could cost more than $500 a pop. Wow, that's insane. And Wynn Resorts shares are in the red after the casino operator agreed to accept a total of $41 million from former CEO Steve Wynn and insurance carriers as part of a settlement of shareholder lawsuits.
Well, it was announced that private equity firm Apollo Global Management will be purchasing Tech Data Corp for about $5.14 billion, not including the debt. CNBC reports that Berkshire Hathaway's Warren Buffett had also had his hat in the race. Berkshire offered $140 per share for the company, but Apollo came back with the offer that Tech Data could not refuse, leaving the Oracle of Omaha empty-handed. Brian, looks like Buffett has been finally looking to put that massive cash pile to work. Were you surprised that he didn't go even higher?
Well, I continue to be surprised by his desire to get into tech. Obviously, his big acquisition, or not acquisition, I should say, big bite out of Apple many, many months ago. But he is staying true to his value investor focus. He just will not get in bidding wars. And you have to wonder, given where the bull market is today, he has to step up here. Even if it risks overpaying, he has the cash to do it. For a company that makes sense, why not?
Well, he doesn't have the best track record with tech, guys, and he has admitted that he is not a tech-savvy person. You know, there's no computer in his office. I know because I went there 5 years ago and had the chance to interview him in Omaha. You know, it's just a very unassuming office.
He has an iPad now.
To the Berkshire office. But, you know, it's just inside an unassuming building that doesn't have his name on the building or anything like that. You're always surprised when you go into Omaha and see that. But not an internet guy, not a tech-savvy guy. Yes, he bought up Apple, but even that he was late to, although Apple has done so well in the last year, Brian, that he may not have been too late. He also has admitted publicly that he totally missed the boat on Amazon. Yep. And one other point I want to make here, we remember that last Berkshire Investor Day, you know, the big Woodstock for Capitalists, yep. One of the questions that was heavily asked was, as you and Charlie Munger start to acknowledge, and they're fine talking about this, that there will come a day, maybe sooner than later, where one or both of them aren't there, does that make working with Berkshire become less desirable? When people are calling for deals, well, they're calling because they want Warren Buffett. And Buffett was saying, no, everything's in good hands. People want to work with Berkshire just as much. I don't know if that's the case. I don't know. And the Kraft Heinz stuff, I think, questions it too.
I asked him about that. And guys, it's interesting because when Berkshire Hathaway acquires a company, they give that CEO, that management team, the autonomy to run their company. So that's such a nice thing because when you think about private equity,
they do not do that. No.
Yeah, and you know, Buffett has had his own criticisms of private equity in general. And then also, I just want to point out with Tech Data, interesting name because it's not the sexiest tech name, yet it's basically everywhere. It's a good pulse on how companies are using tech spending, which is just interesting to me. And also it must speak highly of the management team there, at least the CEO. If Buffett was interested in the company, it's been cash flow positive. I guess in his view, it would be easy to understand for the most part. But
it's so funny, isn't it? Because
if I was Tech Data, I would have taken the Buffett offer.
But, you know, data is the new lifeblood of society. It's great that Warren Buffett owns all these old school businesses, but data, and more data. That's necessary in this environment.
Well, people at Tech Data should expect cuts. That's what happens when private equity gets in.
The question here, guys, though, is should Buffett have gone higher on his bid?
He's going to have to go higher at some point. This is a bull market. Valuations have climbed over the past 2, 3, 4, 5 years. At some point, given his cash pile, he's going to have to step up here.
Maybe his heart wasn't in it.
He could be patient, though. I mean, $128 billion, wait for something to turn, and then, you can buy a lot of elephant-sized acquisitions for that.
Well, and let's remember also that another thing he can do is just buy up a lot of shares of a larger name rather than try to make full acquisitions.
Yeah. Well, maybe I'll just go out there and finally buy Coca-Cola. All right, we'll leave it there, guys. Up next, inside the holiday shopping frenzy. I put my Yahoo Finance detective hat on during Thanksgiving and went behind the scenes scoping out the retailers that did it right and the ones that completely missed the mark. I've got a full report for you coming up next. But first, take a look at some of the big retailers and how they're trading in today's session.
every year it seems that the Black Friday shopping starts earlier and earlier. Our very own Brian Sazi was out in the stores all day on Thanksgiving to see where people were shopping, what they were buying. Sazi,
It's a sad day. Man.
I've known
It's
you
a sad
for
day, Julie.
many years, probably almost a decade, and I know that this is your thing. You are the go-to. Everyone, you're posting on social media what you're seeing. So what were you seeing this time? What was different?
Let's just be clear. My day usually starts off at the last remaining Kmart at 6 a.m. So I was there checking my Twitter feed. It actually did happen, not fake news. But then I actually went to, I got ramped up with the JCPenney, but Best Buy. I really like what I saw in Best Buy stores yesterday. I like that they expanded their toy selection. There continues to be a big hole in the toy business, obviously, because Toys R Us only has one store open in business now. But a lot of toys out there in Best Buy, a lot of big crowds for this company.
It's actually interesting to point out the toys. Let's talk about the apparel companies. What were you seeing? Did you visit American Eagle?
American Eagle stood out to me as a company that's doing it right. For the past 2 years, this company has put up some pretty good sales. The stock hasn't performed that great, but a newly remodeled American Eagle at Roosevelt Field Mall caught my attention. The store looks completely different, and what you're seeing right there is a photo. They put a jeans customization shop right in the store window. Go in there, you can customize your jeans. That is pretty cool, Chief, mostly because none of this company's rivals are doing that, and that is one of the hot trends within teen apparel.
It looks experiential.
Yeah.
You know, another name that we keep talking about, it's just kind of been a sad story, JCPenney.
Yeah,
what was
bad.
the JCPenney Black Friday, or not even Black Friday, Thanksgiving, pre-Black Friday, what was that like?
So JCPenney, you're seeing a photo here right now. That's where they used to sold appliances. So about 25% of their floor, the second floor where appliances were, was filled with luggage. Listen, this company has some serious problems. The crowds were there at 2 p.m. They've been opening early since 2014. They have a lot of square footage and a lot of square footage that is not productive. That's pretty embarrassing.
Yeah.
Whole floor with luggage. Let's get real.
That did not look good.
Yeah.
Not productive is a nice way to
A
put it.
lot of space being taken up. And we, of course, were watching the Macy's Thanksgiving Day Parade, so it brings up Macy's. How is Macy's looking?
Macy's okay. A lot of deal seekers showed up there in the morning. I know we're supposed to be talking about Macy's here, and you see they opened up a shop in Roosevelt Field Mall dedicated to holiday spending. I don't necessarily like seeing this from Macy's. They have giant hulking stores that have been largely empty for most of the year. You would like to see them not renting out more space somewhere else in the mall. Sell this junk in your own store.
You know who's downstairs from our office? Kmart.
Yeah. It is so dreadful. So the Kmart at 6 a.m. where I went to in Long Island, completely empty. It was also empty when I went back there. And this Kmart store, I went there at the open on Black Friday today, right beneath the Verizon Media headquarters. Empty, and very empty. Oh, might I add, it was empty and barren. So not a lot of people there showing up for Kmart. I think this will ultimately be the last season for this company.
You've seen so many different lines of retail from just across the industry. What is the one thing that works? What's that one secret that they have to get right?
I think everything you see at Target. Target has done what you know, Starbucks. They have cracked the code in infusing like this physical world of their stores online. So Target is getting it right. Let me just add one company doing completely wrong. Gap. Gap, when I went into their stores yesterday, one of the worst winter assortments I've ever seen from this company. It's completely embarrassing, and they're out there interviewing new CEOs right now. They booted the old CEO a couple weeks ago. I hope the new person has some kind of merchant experience.
I've got a name for you, Sazi, actually, as long as we're on the topic. Can I ask you your take on J. Crew? Because I know that company has struggled. Now, Madewell is also owned by the same people. I think that's done a little better, but both of them struggling. And yet, maybe it's just a matter of taste, and your taste stays the same. But I find that J. Crew stores, to me, look as appealing as they ever did. I walk in there, and they have a way of, I look at, I want that, I want that, I want that, I want that. But I know they haven't really refreshed the look of things. Certainly doing better than Gap, at least.
J. Crew was okay. Gap is absolutely embarrassing. J. Crew is above Gap, but you know who the new J. Crew is? It's Bonobos. Our Miles Upland fave, Bonobos.
Yep.
They're still owned by Walmart, too.
They're still owned by Walmart. They're getting it right.
Although you hear that it has not made money yet for Walmart. It is not profitable.
Yep.
I don't know how well the acquisition is going, but I like Bonobos, too. Good experience.
Gap is so bad. All right, we'll leave it there. Up next, the holiday fitness trade is all the rage as people everywhere rush to the gym to burn off that 5,000-calorie Thanksgiving feast. Coming up, we're talking with the CEO of Exponential Fitness, Anthony Geiser, about the latest trends in boutique fitness. As we go to break, take a look at how some of the health and fitness stocks are trading right now. This year was a huge one for the boutique fitness industry, and we saw cycling and boxing studios popping up all over the country. And of course, there was the much valued Peloton IPO. Joining us now to discuss the latest fitness trends is Anthony Geisler, Exponential Fitness CEO. Anthony, good to see you here. Interesting business model for you guys. Take us through it.
Yeah, so we're a curator of the best in boutique fitness. So we have 8 different modalities, everything from boxing, rowing, stretching, dance, Pilates. So we just kind of look at ourselves as a curator of the best that's out there in small box franchise boutique fitness.
So Sazi mentioned, obviously, the Peloton IPO, which we've been watching closely. That company has its own issues. But you do wonder if the rise of in-home working out is a problem for classes, for studios, for things that you leave the house to go to. Right. Now, in an ideal world, everyone just does a little of everything. But that's if you have the total expendable income and if you have the time. Right. I mean, it's just so hard to find the time. So Peloton is one example. There's Mirror, which I feel like is gaining a lot of traction. Yep. You just work out on the Mirror and you never leave the home. Is that a challenge for you guys?
Yeah, it hasn't been. Different business model from what we are. We're all communal animals, so outside of time, we donate the time we want to donate and the expense that we want to donate to our fitness. But we're really about people coming in and using a niche product in a community where they're all together, right? Peloton has done a great job, but the main difference is you're spinning in your own room wherever you are by yourself. And this is in a group of people. We have 52 bikes in the cycle bar. So a lot more people hanging out doing the same thing.
It's so interesting. I go to bar classes, and I think you're hitting on something about the community and the accountability. You run a big empire. How do you kind of keep that consistent across this, across the country, keep the culture there? Yeah. Because I feel like that would be a challenge, right?
Absolutely. It starts with our franchisees, so we have quite a vigorous process of creating franchisees in our different modalities, whether it be bar or spin or anything. And so we start there, and then a lot of instruction. So all the instructors are trained by us all across the country, so franchisees don't get to just go hire whomever they want. So it's continual support, continual training, and trying to keep everyone invigorated. So.
Are you done making acquisitions?
We are for right now.
Okay.
We have the capital, the infrastructure to do it, but there's nothing out there right now as a 9th brand or 10th brand or modality.
So you're not seeing any new emerging trends?
Nothing that I'm excited about. You do have boxing, but it's the most saturated franchise market. You have high intensity training. Orange Theory's done a great job. So nothing out there that that's the obvious ones are just staying out of them for certain reasons.
Of course, everyone says they're done buying until they announce the next thing they buy.
Yeah, exactly.
What would you say is like your biggest competition? Like, what is it? How do you get people in your studios?
Yeah, so obviously, something like yoga or Pilates, there's a lot of independents out there, what I call passion projects, right? Someone who loves yoga and their dream is to open a yoga studio, and so they go open. So you have a lot of those independents. On a big box, sort of corporate scale, you'd have your Core Power Yogas or Soul Cycle, people like that, that we compete with on the corporate side. But in the franchise world, like if you look at yoga, there's no one franchising yoga at any scale other than us, right? So the franchise business, we're actually, kind of standalone.
All right, Anthony Geisler, we'll leave it there. Get me off my Peloton bike and into one of your classes, all right?
Yeah, anytime.
All right, fair enough. Right. Coming up, he's a longtime deal maker and the man behind Crock-Pot slow cookers and Mr. Coffee machines. Jarden Corp founder Martin Franklin joins us straight ahead with his take on the current business climate. But first, take a look at how some of the consumer staple stocks are trading in today's session. Welcome back to the final round. I'm Brian Sozzi. With me now is Yahoo Finance's Julia Roche and host of Wi-Fi AM, our very own Dan Roberts. With less than 30 minutes left in the trading session, let's get a look at where the markets are right now. See if red on the screen, not down too much, but down nonetheless. Dow was down about 88 points.
All right, well, for more on today's market action, let's go to Inez Ferre on the floor of the New York Stock Exchange. Inez?
Julia, WTI is under pressure. Take a look. It's down more than 4.5%. Iraqi's prime minister has announced that he will be resigning after weeks of protests, and the end of protests could mean less of a threat of a disruption to oil, and that's putting pressure on oil. And if we look at the energy sector, some of the energy stocks which have been under pressure include Exxon and Chevron off fractionally. You've also got Schlumberger down more than 1%, Valero down more than 1%, and some of the other energy names which are under pressure as well, Apache and also Diamond Offshore, off by about 3%. We're watching Deere & Company off just fractionally. This is after it was cut to a sell at DZ Bank. Also, UBS cut its price target on Deere to 169 from 180. Earlier this week, Deere had been under pressure. This is after they reported their quarterly results, warning about the China-U.S. lingering trade tension and the effect that that's having on farmers being more cautious on making investments and buying new equipment. Julia, Brian?
Inez Ferre, we'll talk to you after the bell.
Martin Franklin is a veteran deal maker and the founder of consumer products giant Jarden. He joins Yahoo Finance now. Martin, good to see you. I'm going to refrain from asking you about consumer trends just yet because that's how I'm most familiar with you. But you are fresh off making a major $2.9 billion deal for oil services play API. What's next?
Well, API is it's not all services. It's a specialty services company, mostly in the life safety systems business. It's really a play for me on the United States economic activity and rebuild of infrastructure. It has about 15,000 employees, about $4 billion of revenue, about $400 million of EBITDA. It's a great business, and it was a recent acquisition for us, and we'll be looking forward to growing it over the next few years.
Sir Martin, it's Julia LaRoche. I want to talk a bit more about API. You were just mentioning the safety systems. These are really useful for construction. I guess just looking out, what is your read on the state of construction? What are you seeing? What sort of trends are standing out to you?
Well, for us, it's not just new construction, but it's also rebuild, expansion, and all those kinds of things. We're pretty optimistic. I mean, I think that overall, you've got an elongated recovery in the U.S. We think it's going to stretch out for a while. I think rates are going to stay low. When we look at the sort of order activity that we have in the business, and we do a lot of not long-term contracts, but a lot of relatively small contracts that are serviced over about a 4-month period. Average contracts under $1 million. We see a lot of continuing activity. Organic growth is between, well, really a little bit more than 5% in that business. So for us, that indicates we've got about, I should say, about a 12-month lead time in terms of visibility into the business. So we think things are going to continue in a pretty healthy way.
Infrastructure investing, you just mentioned infrastructure. Is that a very strong area of opportunity for investors looking out over the next decade?
Yes, absolutely. I mean, look, you don't have to be an economist or an industrialist to just look at American infrastructure and know that it needs a lot of investment. If you spend any time in Europe, for example, to compare it in terms of its standard, the U.S. is badly in need of infrastructure improvement. You have a lot of other activity that really constitutes this infrastructure, like the build out of 5G technology across the U.S. There's a lot of economic activity that comes with that. So yes, I think it's a good long-term play for investors in the U.S.
Martin, Dan Roberts here. While we have you, I thought it would be interesting to get your take and look in the rear view at when you sold Jarden Corp to Newell. And I know there was that proxy fight, and eventually you left the Newell board. That was all about a year ago, a couple of years ago. And recently we've seen a lot of interesting acquisitions, different kind of industries. But we just saw Fitbit sell, and then it came out that actually Facebook was involved in the bidding there. A lot of names have recently sold. There's been some buying. PayPal spent a lot to buy this Chrome plugin Honey. And I'm just curious, it's useful to have you on to get your take on what that was like to sell the company. When you look back at it, whether you're surprised how much tying up we're seeing across different industries, especially media right now and telecoms.
Yeah, look, first of all, no regrets on my part. $60 a share was a fantastic return for our shareholders, 34% compound return for 15 years of building that company. Obviously, I wasn't overwhelmingly happy about how it was managed after we sold the business, but that's probably something to ask people from Newell as opposed to me. In terms of economic activity, in terms of M&A, look, the economy's healthy, and consumers are still buying. I think their tastes and appetites have shifted. You rightly pointed out to a lot of businesses that are more new technology businesses. Obviously in Jarden we focused on very old world technologies, very basic businesses. But I think that this trend will continue. I think the growth of online sales and changing tastes of consumers are going to be continuing drivers in the economy. But I do think economic activity is still going to be there. Focus on health and fitness, better eating habits. All these things are new drivers today for consumers.
All right, thank you, Sir Martin Franklin. Good to see you.
Nice to see you. Thank you.
Coming up, it's Black Friday shopping sneaker edition. For those of you looking to snatch some holiday footwear deals, straight ahead, our resident sneaker expert Reggie Wade is breaking down the hottest Black Friday sneaker deals. We'll be right back after this.
Well, Black Friday is a day of deals, and we are on the hunt for the best ones. While many people take advantage of the steep discounts on electronics today, a number of sneaker brands are getting in on the action, and our very own Reggie Wade joins us. Reggie, what are you guys finding in the sneaker world?
Yes, well, right now in your hand, what we have is the new Steph Curry. This was released today on Black Friday. Steph Curry 7 Sour Patch Kids collaboration. And look at this. I think these are gorgeous. If I'm being honest. Yes, I love this. And I think this is the kind of stuff Under Armour needs to do. Get into the collaboration game. Show people that you're out there. Be a little flashy.
Dan, I have my thought. I know we've talked Under Armour before.
It is not my favorite aesthetic, but I do think that if you ignore the color scheme, this looks to me like a nice sneaker. I mean, it looks to me like it's probably comfortable and it's cushy and it looks like a good shoe. It's not one I'd wear.
Nike still makes a better sneaker.
I like the green, though. Guys.
Brian, you wouldn't wear that? Come on.
Hey, it's kind of cool. I would wear it, but Nike's higher quality.
Yeah.
You're telling me this is Under Armour? Because it doesn't scream Under Armour. Where's the Under Armour logo on
You
here?
notice the SC for Steph Curry, but not the UA logo.
Taking a little play out of Nike's book. Remember, you seldom find a swoosh on any Jordan branded sneaker, only the retro models. So I think that's the direction they're going in, and I actually think it's a slick look. I like it.
Wait, that's very interesting. So is the Curry line becoming I mean, obviously not sales-wise, but in terms of brand, size, reputation, importance, is the Steph Curry line becoming for Under Armour what Jordan Brand is for Nike?
No, in no way, shape, or form. But I just think from a design cue where we don't have the company logo on it, we have Steph Curry's own logo. I think that's the direction they're going in. I think it's smart.
Found the logo. It's right there on the tongue.
On the tongue.
Really subtle.
Very small.
Yeah.
Subtle.
It's
Very
subtle,
subtle.
but I mean, I know you're not into the bright colors, but I mean, if these were in hot pink, not that orange pink, I would.
You could rock those.
Rock those
Yeah.
in the gym, yeah.
The deals. I've seen a lot of deals out here today.
Yes, especially the best deals are Dick's Sporting Goods. They're offering up to 60% selected sneakers. You could even get a LeBron Low for 60% off in a Yahoo purple. So that actually was my,
Online too, Reggie?
Online, yes, online too.
I'm going to put you to the test and put you on the spot. Let's play a little game here. I actually, legitimately, this isn't just for the show, I am in the market for a new pair of sneakers. I lean toward some form of the Boost, Adidas. Where should I go, Reggie, to get a deal today on Adidas?
Online, Adidas Boost 30 to 40% off. Go, you'll even find Adidas Boost 2019 version, which has been a big seller for the company. So I would go online.
Just direct from Adidas?
Yes,
or?
Adidas direct, no code needed, just 30 to 40% off.
JCPenney, $50, baby.
Whatever. No, I gotta say, I love Reggie's knowledge of the sneaker industry. I always go by your desk when I'm like, oh, I want to buy a pair of shoes. I mean, what's the best time of year to actually get a new pair of kicks?
I would probably say the best, it depends what you're looking for. If you're looking for what they call heat, like the exclusives, what the sneakerheads are going to be wearing, that's all year round. The drops are pretty evenly spread. But if you're looking for deals, around this time is the best time because you have those Black Friday savings. Like I said, Dick's 60%. You're not going to get that after the holiday. So if you're in the market for a new workout pair, I think this is the time to get it.
Should I buy today or Monday? Cyber Monday.
I think these deals will hold up till Monday, so I think you're pretty safe.
Is Foot Locker still the leader in footwear?
Foot Locker.
They seem to always have the cooler stuff, but I didn't see anybody in the stores yesterday.
You know what, Foot Locker? I like Foot Locker because you can go, you can get a Curry, you can get a Jordan, you can get a lot of these different sneakers. It's one-stop shopping, and they have a wider variety as of Dick's, but Dick's just got Yeezys in September, so they're stepping up their game. They're getting more supply, the more exclusive supply.
Yeah. I was just in a couple of Dick's Sporting Goods. Big department.
Yeah, but if you want something like heat, I would go with Foot Locker over Dick's.
Well, Reggie Wade, we hope you have an awesome weekend. Thanks for filling us in on all things sneakers.
Thank you very much.
Cool stuff. Coming up, can this massive rally in the markets hold through the end of the year? Our next guest says there is one clear sign that this rally has legs. We'll tell you what it is right after the break. But first, take a look at some of the Yahoo Finance trending tickers in today's market action. With stocks breaking out to new highs, many investors are wondering whether this rally can last through the end of the year. Our next guest says that there is one clear sign this rally does have legs. The small caps, which have been lagging the three major indexes so far this year, are now breaking out higher as well. Joining me now is T.G. Watkins, Director of Stocks at Simpler Trading. T.G., I appreciate the nod to the breakout in the small cap Russell 2000, but it has lagged for most of the year. Doesn't that suggest that maybe the market is due for a breather?
Well, this move that is happening right now, it has been pretty strong and very extreme as we come into one of the more bullish times of the year. And since recently, the last couple of days, it's just been going almost straight up. So yes, near term, we could use a little bit of a breather. But overall, the fact that the small caps are starting to break out of this very, very long consolidation shows us that, you know, the ones that have a lot of high risk are actually starting to pick up and take off and support the rest of the market.
TG, let's talk about cannabis. This was one of those really hot trades that people were talking about. Yeah, we've seen a lot of these names disappoint and underperform. What's your take on the cannabis sector? Will we see a comeback, and why?
Yeah, well, I don't know if everybody's heard, but the House has passed the MORE Act, which has basically brought down the Controlled Substance Act from the federal level for cannabis. And we see this as a step to basically letting states go and do their own thing, free of being federally prosecuted on. And then this also allows the banking industry to get into it. And so we saw a huge, huge amount of volume go into all of these cannabis stocks, and they rocketed up for a couple days after this news announcement came out. So we're just kind of waiting. We're waiting to see how this progresses, but we still see a lot of volume, and we're starting to see kind of a bottoming pattern in some of these big name cannabis stocks. And what we're looking for is to see when they actually start to take off. But I think it's something that we really, really need to look into.
Do you think this market is starting to price in the re-election of President Trump?
It's kind of looking that way. I mean, he's doing a great job with the economy, right? The only other thing as far as the re-election is a lot of people have been talking about the impeachment hearings and seeing what that was going to do as far as, you know, having problems with the stock market. And now that those seem to be kind of losing a little bit of steam, the market's taken off, and it just doesn't seem to care too much about the news that's going on out there.
TG, Dan Roberts here. Good to have you back on. Let's talk about Peloton. I know you're watching Peloton, and that has been a fun one for us to talk about. It actually is up a little bit today, I think, on an upgrade from someone. Give us your take and why Peloton can improve, because rocky start for that debut.
Yeah, it was, but you know, a lot of times we see that with IPOs. There can be all sorts of different factors coming into an IPO, whether there's news or whether they hyped it up, or just they need to get a better price before people get in there. But we did find out a few weeks ago that George Soros also has a big stake in it, and that's why there was one day we were looking at it and it popped up, and we had to go and look and figure out what the news was. In fact, it was disclosed that Soros was investing in it, and so that is what has carried this recent one. So a lot of people look at that he's involved and invested, and then they're going to jump on board with it, and it just looks like it's doing pretty well now.
Before we let you go, TG, what do you think a good investment would be for the next decade? No pressure.
Oh boy, well, I do look into the cannabis ones. So ACB and CGC, which is Canopy Growth, you know, I really do like those. The fact that the society, you know, our opinion, our mindset of cannabis use as far as medical and or recreation has been changing, and we now start seeing that with the government. I think we should really look at those. They had their heyday a while ago, we know, with Tilray, and I think that there will be a resurgence at some point along with that.
All right, well, looks like a decade of weed smoking and some edibles. Thank you, T.G. Watkins, Director of Stocks at Simpler Trading.
Great, thank you.
Coming up, the closing bell on Wall Street is less than 10 minutes away, but first, we'll get technical with Jared Blickery at the Wi-Fi Interactive Board. We're back in 2 minutes. Time to get technical, but Yahoo Finance's Jared Blickery over at the Wi-Fi Interactive Board. Jared, my first time here with you. This is pretty cool.
Yeah, well, we got the Dow down in honor of your presence here. Not even down triple digits, just down 1/3 of 1%. S&P 500 and the NASDAQ are down about 1/3% too. Here's the intraday price. Oh, this is 1 month. I was going to save this, but here's the intraday price action first. You can see we gapped down just a little bit, heading south. But, you know, the worst, I think in the last 2 months, we haven't even had a 1% down day. These dips have been very mild. So here's the month to date. This is November's performance, up 3.5% basically. S&P and NASDAQ, this will be the best November since 2009. And then we got to take a look at the VIX.
Low volume session today.
Yeah, it is a low volume, but we are having a little bit of elevated volatility. The VIX jumped up a couple points to 12.68. We were down in the lower 11s only yesterday, or I guess 2 days ago. So we got to keep an eye on that. And then finally, got to check bonds, 10-year T-note yield up 1 basis point. Look, in the month of November, we had a lot of ups and downs, and so it looks like we're net down here, but interesting month in terms of bonds.
Can you just appease me? Could you pull up the Dow transports? So we just had a guest on really pounding the table on the Russell 2000. Anything in good or bad here?
Yeah, well, let's do this. I can do you one better. We'll do a comparison of the Dow Industrials versus the transports.
I dig it.
And we'll go to a year-to-date chart because the transports have been bumping up against key resistance here. So we got the Dow Jones in the purple. We can see it's trending higher here, making new highs, whereas the transports just kind of not really being able to get above this resistance level. And this goes back farther. Now, what did happen in the meantime was the Russell 2000 broke out. So if we look at S&P 500 versus Russell 2000, 2000 was able to make that breakout, but the transports just haven't done it yet.
And what about retail? I see the XRT versus the RTF on the board.
Yeah, this is pretty interesting because if you take a look at what the VanEck Vectors Retail, that's RTH, is doing, that's up substantially, 28%, whereas the more traditional, weighted more towards brick and mortars, the XRT, that's only up about 9% this year.
Wow.
Yeah.
What about in some individual stocks?
All right, let's go to the heat map, and we can do the Dow on a month-to-date basis, or there's a Dow. So month-to-date, we have Disney is up the most. All this excitement about Disney Plus, not a surprise there. United Health, healthcare stocks really got a boost this month, and actually last too. That's up 11%. Then we got Walgreens. I still think that's a dead cat bounce.
Look at Cisco, Jared. Jared, right after that Cisco quarter, not two bad quarters in a row for Cisco. The bottom has completely dropped out.
Yeah, and it broke this support line here, and that's an earnings story this month, as is Home Depot. That's why Home Depot is down about 6%, but it's still up 28% for the month, and it's the second biggest component of XLY. Now, the largest component is Amazon, and we can see here that it's somewhere in this mess of...
somewhere in there.
Autodesk taking the cake at 23% there.
All right, there we go. Jared Blickery with the Wi-Fi Interactive Board. Coming up, it's the closing bell on Wall Street, plus all the car fans hoping for a tug-of-war match between Ford and Tesla are getting some disappointing news. We've got the details right after the break. Welcome back to the final round on Yahoo Finance. I'm Brian Tozzi, and with me now is Yahoo Finance's Julia Roche, our very own Rick Newman. We're bringing here Thomas Thornton, hedge fund telemetry founder and CEO. Good to see you.
Nice to see you too.
So, guys, interesting market action. Tom, this bull market just won't die.
It seems that way, but I think we're getting a little stretched here. And the stuff that I'm looking at with market sentiment is overloved.
Yep. You're looking at the closing bell right now, real quickly on Wall Street. The week will, or the session will end in the red on some of those trade fears. But Tom, please continue.
Okay. The market sentiment stuff that we look at, all the polls are very, very overbought, overloved, I would say. Overbought signals we're seeing in a lot of the technicals. You could look at some of the most basic technical indicators like RSI or MACD, and they're overbought. I also look at DeMark signals, which is a little bit more esoteric of an exhaustion, trend exhaustion signal, and we're getting a lot of signals.
You get a pullback soon?
I think we could. Yeah.
So, Tom, when you write hedge fund telemetry, I know a lot of folks who are reading it. Talk to us about some names that you are focused on right now. Microsoft is one of them. What else are you kind of looking at, and what's your thesis there?
Well, I've been looking at both Apple and Microsoft. I've charted them together. They're up like 60% off the low from the December lows. About 16% above the old highs last year in Q4. But those two stocks, year to date, the attribution is about 35% of the NASDAQ 100. That's just really, really narrow for these mega cap stocks. And I think it's going to be tough next year.
Tom, how do you explain this melt up? I mean, we've been hearing, it feels like we've been hearing this since the recovery from the December lows. Everything's overvalued, everything's overbought, and yet it keeps going up. What is pushing this up at this point?
I really do think it's these big mega cap names that have done the majority of the work. We're seeing about 8% of the S&P components on a daily basis hitting 52-week highs. That's too low. It should be a lot higher. And in January of 18, we saw like 40% hitting new highs. So the participation bothers me a bit.
So how do you kind of play this then, if it's just a few names driving this melt up, if you will?
Well, I think we're starting to see some dispersion. Look, small caps just came back, and your previous guest said he thought they were going to continue. I don't. I think they're really limited. We have a really good seasonal pattern that if you're bearish, you're fighting, and that's tough. I can admit that. But we've seen a really persistent trend, and I think that it won't take much to maybe pop a bubble here.
I suspect, Rick, you will want to chime in on this one, but do you think this market is starting to price in a President Trump victory?
I think next year you're going to see 3 or 4 periods of disarray in the market from a tweet or during a debate. Who knows? I think it's going to be close. Like it was last time.
We've seen in healthcare, for example, healthcare has been pricing in an Elizabeth Warren victory, and she's not even the nominee, and she's actually on the way down in the latest polls. But so healthcare stocks have recovered a little bit, but she's been talking, of course, about Medicare for all and a kind of a big government takeover of the healthcare system, which has triggered that. That was premature, and I think that's what we're going to see is this, guessing that's way ahead of its time, which is what you're referring to next year.
Absolutely.
I mean, when you're writing your note for clients, and we're talking about 2020, how much, I guess, from an investor's perspective, does this matter? I mean, you're talking about multiple periods of disarray. I guess you're saying Elizabeth Warren could be pricing in Trump. How, from an investment perspective, should one think about their portfolio or playing the 2020 election?
Well, I think that if anything, this was a pretty good year after a bad last year, fourth quarter. So I think it's going to be a lot tougher. I think you have to be a lot more nimble. I think you have to be really tight with what you're buying, employ stops, perhaps use some downside protection, puts, short stocks. That's what you're going to need to do.
What does disarray look like in the markets? If we have 3 periods of that, what does that look like in terms of percentage?
I think we could see 3 10% pullbacks, maybe more.
Wow.
Well, another...
Does that add up to 30%? Or 3 10% pullbacks, a recovery, another 10%?
I think you're going to see small recoveries, and then it'll fade a bit more.
That's interesting to
Sorry.
watch. No. I mean, that was actually a really
Do
good
the
point
math
to
on
bring
that.
up and make the 10% pullbacks. Another name I know you've talked about in the past, Tesla. Any update there? What do you make of what's going on with Tesla?
Well, it's just one pump after another. You have this new truck, the Cybertruck with broken windows, but it's a Teflon stock. I mean, this is a company that, if you really dig into the balance sheet, it's structurally bankrupt. And they have, next year, I think, a demand problem that's going to start to happen for them, and that's tough.
All right, interesting stuff here. Hopefully these markets do not experience those pullbacks like we said, like you just said. Thomas Thornton, hedge fund, Telemetry founder and CEO. Good to see you.
Thanks.
All right, well, for more on today's action, let's go to Inez Ferre on the floor of the New York Stock Exchange. Inez?
Julia, since the Dow ended down about 112 points, let's look at some of the Dow laggards today. Those include Dow Inc., down more than 1.5%. Home Depot down more than 1%. Walgreens was also a laggard today, and ExxonMobil, as energy stocks were under pressure today. WTI was sliding today. Intel was also one of the laggards on the Dow. And then just looking at the leaders on the Dow today, those include IBM, up about 0.5%, P&G, Verizon, our parent company. Also, Walmart was up fractionally on this Black Friday, and Cisco was up fractionally as well. And then I just want to mention Amazon. I know we've spoken so much about Amazon and the holidays, but let's talk for a second about their cloud unit, because Reuters is reporting that Amazon has designed a second-generation data center processor chip using a technology from SoftBank's ARM Holdings. And this chip is reportedly 20% faster than the first ARM-based chip. And if successful, then Amazon would not be as reliant on Intel and AMD for server chips. Brian, Julia?
Inez Ferre from the New York Stock Exchange floor. Thank you so much. Have a great weekend.
You too. Have a great one. Happy holidays.
Tesla has been dominating headlines with the new Cybertruck this week. Last we heard, Elon Musk was ready to have a tug-of-war match between the Cybertruck and the Ford F-150 after claims that the initial one was unfair. But now Ford is backing out, saying they will not participate. Rick, what's up with this? Should they just have went toe-to-toe with this?
Yeah,
with the
why did
Cybertruck?
Ford give up so easily? I mean, first of all, Tesla's not even making this truck, so Ford can pump this for 2 years.
The F-150.
Before there's an actual off-the-shelf, that anyone can actually buy this. That's if they make it. I'm always skeptical of the deadlines they set. Yep. I mean, they usually miss their deadlines. I think Ford could have made hay off this for the next 2 years and said, we're still waiting, we're still waiting, we're still waiting, we're still waiting. Meanwhile, we've sold 800,000 F-150s. Where's your Cybertruck? But no, Ford is an old dinosaur of a company, and they're we don't want to get into a battle with Tesla.
It would have been amazing to watch, let's just put it that. But, I mean, what is the upside for Ford? Like, okay, so say they do the test and the Tesla Cybertruck just smokes the F-150. Womp womp. Like, I mean, yeah, you were saying we're waiting for your truck, but, I mean, couldn't that be devastating to their brand?
I guess, but I mean, each side could rig it in their favor. So Ford could do it one way and Tesla could do it another way, and they could each do it so they would win. That's the normal thing. I mean, the interesting thing is, like, Elon Musk of Tesla he'll make a dare or a public statement, and he doesn't care about losing. This is the guy who throws rocks at his windows and they break, and he says, "Oh my effing God!" But yeah, he thinks somehow that shows that this is how daring Tesla is. Ford is just a conservative company, and there's no way around that.
Rick, I actually agree with you that will they make this truck? Where are the semi-trucks? I don't see the Cybertruck coming out anytime soon.
I mean, the Semi is, my understanding is there's a prototype, but it is way easier to build a prototype in a lab and to build 5 of them than to build a mass market vehicle that people are going to pay a lot of money for and make it a solid value proposition, especially with all the competition in the marketplace.
And I guess,
I think we are further than Tesla says that we are before we actually see a Cybertruck.
I gotta say, I saw 2 Teslas over my Thanksgiving holiday, and I said to my husband, like, I'm just like not that impressed with it. Like, maybe that's rude and not very nice, but I mean, when it first came out, it was like, wow, that's like a really sexy car. Yeah. Now it's just like, but I'm like, oh, the Honda Accord looks really good now.
Well, I think the reason for that is most of the Teslas on the road are sedans, the Model S and the Model 3. And sedans are not hot right now. Sedans are considered boring. People want crossovers and saucier types of vehicles, and that's not what Tesla has right now.
And Rick, apparently one of these Cybertrucks were caught on Instagram.
Yeah, around Tesla's. Do we have the video to show? Maybe we don't. But some guy was just around Tesla's headquarters in Hawthorne, California, and saw one on the road. But I think Tesla should be. We don't even know how many there are.
This is a big marketing
probably
stunt.
5
We've
of
been
these
talking about
things.
this thing for the past week.
There it is. Well,
But, yeah,
I think that's not the Instagram. That's not the live video. That's the promotional video. But yeah, some guy saw one driving on a road. That means Tesla somehow got permission to drive an experimental vehicle on the road
With no mirrors, no side mirrors.
Yeah. I mean, does it have headlights?
I didn't even notice that. It's got it looks like a strip for a headlight, but I didn't even notice no mirrors. What?
You have to have. It's a law. The law says you have to have side view mirrors and a bunch of other stuff that their demo doesn't have.
That's so funny you pointed that out. I didn't even notice.
That Tesla has clobbered the shorts this year.
They have clobbered them this year. Last year they didn't. It depends when you cashed in. There's still a huge short interest in Tesla, though.
Did you put a $100 deposit down?
No, but I did the $2,000 deposit when the Model S was first offered, and I just wanted to see what happens when you put the deposit down. And I also wanted to test: do you actually get your money back?
Did you get your money back?
And I did. Yeah, I didn't buy one, and I didn't intend to buy one.
Okay.
I just wanted to get on the list and see what happens. So, I guess $100 is way less than the $2,000 they were asking for back then. So that's probably why they got so many people raising their hand and sending them a check.
Guys, it's one weird-looking truck, and dare I say, I'm rooting for the Ford F-150. I'll leave it there.
They can all succeed. Yeah. There's enough road in America for all these trucks.
People love trucks.
Sharing is caring. Sharing is caring.
Yeah.
Coming up, we grade the week that was for President Trump with your Trumpometer score. And as we head to break, take a look at some of the best performing stocks in the NASDAQ today. Let's take a look at some of the S&P 500 sectors, all 11 ending the day in the red. Worst performing sectors included the energy sector, down over 1%, weighed down by Apache. The production giant and other energy names were down after crude oil prices fell more than $1.50. The consumer discretionary sector, down over 0.6%. The sector was weighed down by shares of Kohl's, Whirlpool, and Gap, no doubt on fears on how holiday sales have turned out for those companies. And the tech sector, down over 0.2%. The sector was weighed down by Micron, Western Union, and Qualcomm.
Bing, bing, bong, bong, bing.
Well, let's get to this week's Trumponomics. Rick, what's the story this week?
President Trump is really lucky. So I'm looking at the forecast now for 2020. A year ago we were hearing economists say, well, the timing of this business cycle might not be so great for President Trump. We could have a recession popping up right around the summer of 2020 as he's going into re-election. Just does not look like the case anymore. A lot of forecasters are saying Yeah, we're seeing a slowdown in global growth this year, but we think that that's actually going to come back a little bit in 2020. The Eurasia Group recently tried to look at swing states, the economy in different swing states, and say, how's this look for President Trump's reelection? And they say, based on this, we think he's going to get reelected. Unemployment rate has dropped during Trump's presidency in 12 out of 13 swing states. So based on the economics alone, Trump just has the economy at his back, I think.
What's the reading?
Julia, you want to push the button?
Yes, I've never done
This
it.
is last week's reading. We always start with last week.
Where's
We
the-
had 2 failings in a row.
Is
Just
this
push
the button?
that. Yeah.
Oh, guys, first.
It's thrilling, isn't it?
It actually works.
It's actually really cute.
Oh,
Mediocre. That's third highest. I mean, that's Trump speak for not so bad. So, a lot can change between now and Election Day. But at the point, I think Trump is really lucky to have come into office late into a business cycle expansion. And it continues to expand, and it looks like he might have that going for him for the next 12 months.
Rick, is it just me, or is that the impeachment talk has died down a little bit?
I think the buzziness of it has died down. I mean, we're not having any hearings this week. I think the buzziness is going to ramp up again because I think the House is actually going to vote to impeach President Trump. So we're going to go through the formal process with the Intelligence Committee's report, handing over to the Judiciary Committee, and then a final vote in the House. It does seem like they are going to be able to do this by the end of the year, which is what Nancy Pelosi said she wanted to do. And then it'll go to the Senate for a trial. I think what the Democrats in the House wanted to do was that it came a point when they felt they just have to, there's no way they can look the other way at this point, given everything that came out about Ukraine. But they want this out of the way by the time the election comes around, and I think they may have it that way. So there could be 6 months between the end of the impeachment process and the election itself.
And another big potential win, next week we have the jobs report. Some of the estimates I've seen, 190,000 plus increase on jobs.
We have a slowing pace of job growth in 2019, but it's okay. I mean, it's still we're still seeing enough new jobs to keep the economy growing.
All right, Rick Newman, we will leave it there. Up next, the tide may have finally turned at Nordstrom just in time for Black Friday. Straight ahead, Nordstrom's president of stores, Jamie Nordstrom, talks about the business and his outlook for the holidays. We're back in 2 minutes. The tide may have finally turned at Nordstrom ahead of Black Friday. After years of investments online and in stores, Wall Street was positively surprised by sales and profits bouncing back in the third quarter. I had a chance to talk with Nordstrom's president of stores, Jamie Nordstrom, about the business and his outlook for the holidays.
Oh, it's a very big day. I think it's when a lot of families, after a long Thanksgiving day, want to get out of the house, and certainly going shopping is a big part of that. So our stores are really busy. The malls that we're in are really busy, and there's an opportunity to do a lot of business. And so it's super competitive, as you know, but we like that, and we're excited about this year.
What's the setup for Nordstrom this holiday shopping season, Black Friday through Cyber Monday? How are you planning the business?
In our Rack stores, we have some flash events on NordstromRack.com that we think are really compelling. And then in our full-line stores, we've done a much more purposeful job than we ever have in terms of having a really compelling gift assortment. We know that most gifts are under $100 or under $50. So we've tried to have a much more rich, compelling assortment of those great price point gifts at some great prices all the way through the weekend.
What's your level of optimism headed into this holiday season? I'm sure you've been told a good bit, 6 fewer days this holiday shopping season, but the U.S. consumer seems to be pretty strong.
Well, we're retailers, so we're always optimistic. But again, we're focused on what we can control. We're focused on our customer. And we see some really encouraging opportunities out there for us to do a better job for them, taking more friction out of their shopping experience, having the right item, the right time, in the right place. We're always focused on that. And as we've started to do a better job of bringing all of our assets together to be more focused on serving customers in the market where they live. We started in Los Angeles last year. We just came to New York and lit up a number of capabilities that really for the customer, the way it plays out is most of the merchandise that they might want to buy from us, we can deliver next day, if not same day. And our ability to, again, continue to take friction out of their experience is leading to some big wins for us.
I think you surprised a lot of people on Wall Street with your third quarter results. Sales started to turn around. What started to work well for you guys?
Well, I would point to two things. One, our off-price business, our rack stores, NordstromRack.com and HauteLook. We've been really focused on the inventory efficiency there all year. That's really playing out. So that part of the business is really strong. In our full-price business, as I mentioned, our market focus, both in Los Angeles, which we started about a year ago, and more recently in New York, that's starting to play out in some inventory efficiency opportunities that we see, as well as I think we're acquiring some customers who say, boy, that's a more compelling way to shop. They make it easier for me. They make it more convenient. And in a place like New York, convenience is a luxury. And so if we can provide that, we think there's more business to be done.
What is that local strategy? You started, I believe, in LA. Where are you rolling it out the rest of this year and into 2020?
Yeah, we just most recently rolled it out here in New York. So we've got our flagship store that we opened last month. We have two Nordstrom local service hubs, one on the Upper East Side, one in the West Village, and then we have express services in our two rack stores here, so that really almost anywhere you are in Manhattan, there's a really convenient place to pick up your item or return it, or even get your pants altered. And we know that's a convenience that customers are looking for. We want to have that live in our top 10 markets by the end of 2020. We recently launched in Chicago, Dallas, and San Francisco, and we see opportunities to accelerate that going forward because the customers are really voting that that's how they want to shop.
Do you think this is the turnaround a lot of people on Wall Street have been looking for you guys for some time?
Well, again, we look at our business over the long term. We've been around for 119 years now, and we're thinking about how do we create value and loyalty with customers over the long term. That's not about next quarter or next month. It's about doing a good job for the customer, giving them a great experience, making them feel good, and when we do that, they come back and buy more from us. We see a lot of opportunities to do a better job of that.
And the last time we talked to you was the opening of the new New York City flagship store. How has that opening been received?
Really great. I think the reception we've gotten from our customers here has in some ways exceeded our expectations. It's early days, and we've got a lot to learn. We're listening to our customers, but so far it's been really great, and we're really excited about the opportunity to continue to grow the business here in Manhattan.
Coming up next, we've got a look at what will be making headlines next week. Plus, from CEO to influencer, why Jeff Bezos is breaking the internet with his swimsuit. We'll be right back. Now here's a look ahead at what will be making headlines next week. On the economic front, we'll get a pulse on the health of the U.S. manufacturing sector on Monday with November PMI and ISM manufacturing indexes both out in the morning. On Wednesday, we'll get the private sector employment data for the month of November. This is all leading up to the big ticket November jobs report out at 8:30 a.m. on Friday. Economists are expecting 190,000 jobs were added in November, with the unemployment rate expected to hold steady at 3.6%. We'll be live at 8:30 a.m. on the first trade with instant analysis. There are also some earnings reports still trickling in. We'll hear from Salesforce on Tuesday, fresh off its big Dreamforce event. Julia Roche was there for that one. Restoration Hardware is out on Wednesday. All eyes on that after Warren Buffett's recent investment in the company. Meanwhile, Slack is out with earnings on Wednesday, too. And Ulta Beauty and Tiffany & Co. are reporting on Thursday as well. And out of Washington, D.C., there'll be the House Judiciary's first impeachment hearing on Wednesday. Plus, the first couple will travel to London for the NATO summit. Investors will be watching for any action around the China trade deal. There was some talk that a phase 1 deal might be signed around this time, so we'll keep an eye on that for you all.
All right, from tech billionaire to fashion influencer, Amazon CEO Jeff Bezos was spotted wearing a pair of octopus print swimming trunks made by the French designer Val Brequin while vacationing this summer. Bezos' choice of swimwear was apparently so popular that the brand told Business Insider it has since relaunched the $260 swim trunks from its 2014 collection due to a, quote, frenzy of people wanting to buy the look. Guys, what? $260 swim trunks? Y'all are men.
Rick's so wants one. I can tell. This is right up Rick's alley.
No way.
No.
I'm not
I'm
not an East Coast elite like you, Sazi.
Oh, fair enough.
I mean, I don't think I've spent $260 on swimming suits in my life combined.
Look at the style. Look at the style. It's kind of cool.
My dad has octopus swim trunks from Lilly Pulitzer, and they were on sale, so they're probably less than $50.
So I might get the knockoff version.
Yeah.
But I want to tell you something. So Amazon.com actually sells the exact swim suit that Jeff Bezos made such a sensation over the summer. It's got one review, and I think this might be Jeff Bezos himself reviewing.
What does it say?
It says, best swim trunks ever, well worth the price, quality is amazing.
Oh my gosh, I love it.
Somebody needs to get in here and bring this to Target. Cheap chic. Let's get it going.
I mean, are people going to send stuff to Bezos like, hey, wear my thing?
Because
then, you know how for influencers, it's like, oh, please wear this.
Probably already are, yeah.
This is like the royal family type stuff. Every time royal family wears a new outfit, usually it sells right out.
I once wore a dress that Meghan Markle wore a week after I wore it, and then that thing was sold out. So I'm just glad I got it in before her. She copied me.
Rick, I'm an East Coast elite. That's harsh, man. That is just tough.
I would have expected you to pick one of these up yesterday when you were out shopping the doorbusters.
$260 for swim trunks are just too darn.
Margins, y'all, margins. We should go into this business.
What do you wear them once a year? Well, I guess.
I don't even know. Can you get in the ocean with them?
Bezos money. I guess he's just traveling around constantly, so you're always in the ocean.
Well, he just goes from yacht to yacht to yacht.
Yeah.
But I think I think he actually needs more swimsuits because I think they caught him on camera wearing this like 4 different times.
Well, that's a faux pas. You can't repeat your swim trunks. Come on.
East Coast elite. Rick Newman, good to see you. Julia Roche.
Bye, guys.
As well. Have a great weekend. And tune in on Monday for Julia Roche's exclusive interviews with DoubleLine CIO Jeffrey Sherman and veteran portfolio manager Monica Erickson live from DoubleLine Capital's trading floor. We'll have all-day coverage right here on Yahoo Finance. That's all for us now on this Black Friday. I'm Brian Sazi, and this is the final round on Yahoo Finance.